Of course, back on the agenda, so we also keep an eye on that sector. Iveco, this is also a defence story. Carrera della Sera in Italy is reporting that there could be interest in the defence unit of this truck-making business. Various bidders are mentioned, so could there be some kind of battle for those assets? And Allianz is selling some assets in India for more than 2.6 billion euros. Guy?
Okay, let's talk about the market open. Here we go. It is time for the opening trade. Let's give you some numbers, give you some colour on what is happening here as well. Let's start off with the index levels and figure out what is happening here. We are expecting a small move to the upside, despite what we're seeing in US futures this morning. Spanish assets are a little bit higher. We're up by 0.2%. London up, let's call it 0.1%. Maybe we're going to need to round up a little bit in just a moment. But this isn't a huge move forward. The next 48 hours, really interesting in terms of what we're going to learn. We've got, obviously, the key events taking place in Europe. We've got the Fed coming up. We've also got what is going to be coming out of NVIDIA to focus on as well. There's some massive moments. Yesterday was a light volume session in the United States, and to a certain extent here in Europe as well. Is that what we see this morning as we wait for clarity on some of these key events? We're a little bit higher. Do we wait? Do we need some certainty? Is that what we're going to get a little bit later on, Chrissy?
Certainly something we're going to be keeping a very, very close eye on. And of course, it feels like all of this momentum is showing up, or at least moving towards not only the German vote later today, but of course the DAX open in about 3 minutes' time. From an early performer standpoint here, we are looking at perhaps some of the heavyweights. So we're talking about where that defensive trade is coming from. It's the heavyweights leading the charge to the upside. I'm looking at Novo Nordisk. I'm looking at SAP. I'm looking at ASML. A lot of guys, Core 6, actually leading this market higher. But it is broad. There are broad gains in this market. I'm looking at about 505 stocks higher, Anna, about 73 lower.
Yes, and worth noting that all sectors are in positive territory today, so it's quite broad-based in that sense. The worst performing media and retail, but even those moving a little higher. Basic resources is the best performing sector. Energy follows. So this is sort of, growth themes come to mind when you see those going higher. Autos and auto parts is another one that is doing pretty well. And I was looking at some of the industrial goods and services to get a sense of where the defense sector is going this morning. I do see Iveco is there. That's the truck maker that has a defense arm. And we talked about possibly some M&A activity being reported in the Italian media, at least.
So do we call that a defense stock? Because if it is, it's the only one that's hitting a 52-week high today. Normally, my board of 52-week highs is populated by the defense stocks. This morning, Iveco is hitting a 52-week high. Elsewhere, it's the banks. There's a whole bunch of banks this morning hitting 52-week highs. They are back. They are moving strongly. You've also got a bunch of insurers doing well. In terms of what we're watching in terms of the volume, though, I think this is going to be really interesting to see how the volume story shakes out. We'll watch that throughout the day. Do we kind of just wait this morning? A little bit of clarity may be required. You've also got NVIDIA coming up. Do you want to fight that battle yet? Do you want to deal with what's happening with the Fed? Maybe not yet. So I think it's going to be interesting to see whether or not there's a little bit of caution this morning ahead of those key events.
Especially when you mentioned this earlier in the defense sector, but I'm seeing some of these other sectors as well. A rotation seems to kind of be afloat here. Is this ultimately another level of the sell the rumor, buy the news? And yes, I am flipping them on purpose simply because of that German Bund move as well. Let's bring in a true expert here about what comes next. Valerie Noel joins the program, head of trading over at Seas Group. Valerie, a pleasure to have you on the program. We thank you so much for joining us this morning. We're waiting, of course, for this big vote out of Germany, something that the markets are pricing in very much as a done deal. What happens next when it comes to not only German equities, but the defense sector broadly?
No, well, I think, as you said, investor bet on an economy boost for Europe. Today is maybe a wait and see. And as you said, like yesterday in US, the volume was very, very low compared to last week or the daily moving average. So yes, I think it's a wait and see, but you can see the mood. We have seen this rotation from US to Europe since the beginning of the year. So it's just keep going. But I think after today and after the German vote, we will have a more clear picture about what's going to happen in Europe.
Directionally, though, is that I mean, we're looking at a plan here that spans, say, 10 years of that 500 billion euro investment that's been promised. Is that something that in the short term brings gains to the DAX or losses?
You know, I'm not sure that's going to complete this productivity gap that you have between US and Europe. As we think we are, still behind the United States. So we have this on one hand, and you have the tariff in US on the other hand. So I think that the market and the investors just need more clarity of what's going to happen in a few days and weeks. And as I said, I'm not sure that's going to, for the short term, that's going to bridge this productivity gap that we have with the United States or Asia.
Yeah, Valerie, good morning. There's a temptation to think that maybe we get clarity on various fronts, the Fed meeting, for example, this week, and we're hearing a lot more about Ukraine, of course, and Presidents Putin and Trump will be speaking to each other. So a temptation to think we get a lot more clarity about the future path ahead. But I'm thinking we've got April 2nd still to come with the tariffs, and we don't understand wholly how those will be applied. When do you think we get some more clarity about the full picture of the new White House regime and where it goes?
Yeah, I don't know if one day we're going to have one. But anyway, I would say that maybe April 2nd, when you're going to have the reciprocity of the tariff from the Trump administration. I don't know if it's this date, but we're moving in a good direction on everything, geopolitical side. If peace can come, I think everyone would be very happy. We need to know what's going to happen with the tariff and this reciprocity. So that's going to give more or less a direction for almost all the world. And for sure, for the Trump administration, for the moment, I would say tariff, meaning inflation, meaning consumer spending. So all these things, it's on the roadmap. And I think that's the main focus for them for the moment.
Yes, I mean, we've corrected, we've seen a pullback in the S&P down 10%, so correction territory, Valerie. After April 2nd, are you thinking about whether this is a buying opportunity in US stocks, or do you think it is already?
Well, as you said, for the moment, we're still in correction. We know we hear about bear market last week. We're not yet in a bear market. Bear market is 20%. We just touched 10% last week. And if you look at the historical stat, since World War II, we had 48 time correction, and only 12 of them was on a bear market, and became a bear market. So it's true that we have these uncertainties for the moment. The market normally doesn't really like uncertainties. It didn't really like for the US, as we see at the beginning of the year. I don't know if we have more clarity on Europe, but we've seen at least a direction. That's why probably we've seen this rotation. And I think that the main word for 2025 is diversification. Now, I always come back with this, but I think you need to diversify your portfolio. And that's very important.
Okay, so let's talk about
uncertainties.
Okay, let's talk about that diversification. Are different asset classes, the bond market, equities, what's happening with precious metals, gold, telling us different things? Are all these different markets communicating different messages at the moment, or are they roughly communicating the same message?
Yeah, well, for sure, if you look at gold and precious metal, definitely we are in a safe haven part. Gold, we reached 3,000 a few days ago. We had, I think, it's 12 trillion since 1 year, 5 trillion, sorry, in 12 months on the gold price. So definitely you can see that this is a lot of uncertainties, and then people are going on a safe haven asset class. Then for sure, if you look at what's go well since the beginning of the year, you have healthcare, utilities. People get out a little bit of tech, but maybe because people had a lot of tech the last few years. So it's just a rotation. And I think if you are more diversified, it's easy to not avoid, but at least a little bit less shock if we have a big drawdown.
Is the recent sell-off just a rotation away from very, very, very expensive tech? Can we just look at it in those simple terms?
I don't think it's only the tech. As we said, there's all these geopolitical things. We also have seen China came back, with DeepSeek, with Baidu last night. That was, this not only maybe the US exceptionalism has been, I don't know if it's been too exceptionalist. I don't think that we should avoid US at all. We actually, we like United States very much at the bank also. But I think it's not, the world is not only United States, and you really need to think about what's happening in Asia, what's happening in the Middle East, what's happening maybe in Europe, as we can see. So, yeah, I think people was very, very focused about the tech. And we're going to see maybe today what the NVIDIA CEO is going to say. I think it's going to be a very, very interesting conference later in the day.
Yes, NVIDIA certainly will be interesting. I wonder what you think about crypto at this point, Valerie. We've got Bitcoin at 83,000 or so off those earlier highs then. And of course, many people assume that President Trump will be very pro-crypto. Maybe some of that hasn't lived up to expectation. What do you expect to see in the crypto space?
Oh, I don't know if you know, but at the bank we can trade the spot crypto, the trade and custody since 2 years. So we have quite a good view of what's happening, what the client would like wish to do actually trade. And I have to say we had, since a year, we had two big events when the SEC approved the 11 ETF and when Donald Trump has been president. Those weeks been the biggest week for high net worth clients to actually buy crypto. I don't know if they believe it's going to be a real asset class or they just want, have exposure on this new asset class. But we can definitely see have the interest at the bank. We can see people trading every week, not as they trade, other asset, equity or fixed income, because we're not a digital bank. But we can really see an interest from Main Street coming to the asset class.
Valerie, on that note, we will leave it. Great to have you on the show. Valerie Noel, Head of Trading at the Seas Group. Thank you very much. Let's talk about what we're seeing in the market. At the centre of the market, the core six looks like this. Everything is up, as you can see, across the pitch. We have everything from Novo to Nestle trading higher this morning. Europe feels like it's on the front foot. Feels like a kind of cautious start, though. There's a lot happening over the next few hours for all of these stocks and sectors to price in. Let's talk about some of the other individual sectors, stocks we're watching. Joe's here with the defence story.
So there's a bit of a mixed picture in these defence stocks at the moment, Guy. We have got ThyssenKrupp rising now, a pretty decent move for that, one of the best performers in Europe today. Now, there was a Bloomberg story last night about the potential beneficiaries of the German spending plan, and ThyssenKrupp is one of them. They do have a marine unit that is said to be potentially a winner of an order from Germany. I have been asking traders around the weakness in BAE System. Does look like it's just coming off those big highs that we've seen, but that was the worst performer on the FTSE 100. Now, Kinetic continuing that massive drop yesterday, a record 22% drop for the other UK company with big US exposure. A couple of downgrades on that one this morning. Not a big surprise considering the drop we've seen, but a mixed picture as we await the outcome of that vote in Germany, and also the crucial talks between Trump and potentially Russia as well. Another focus, also Gaza as well. Then in terms of Iveco, that was a big mover, as mentioned earlier in the show. Potentially some interest coming into their armoured vehicle business. That is their defence business, more known for their trucks and buses, of course, but potentially going to get some interest, according to Italian press, on that one today. Then here in the UK, the misery continues in the Close Brothers stock today. That one slammed once again in London. This is the company that's really exposed to the motor finance issues in London. We will get that on the screen eventually. There we go. It's down 13%. Also, the owner of the Winterflood stockbroker seeing a continued loss in that unit as well. Generally, a downbeat report from them. Then over in Telecoms Bolloré in France, that one downgraded their earnings estimates this morning as well. A bit of a drop for that one. And a couple of downgrades in the analyst ratings. Well, firstly, a positive one on Rio Tinto. That is an overweight rating over at the JP Morgan analyst today. So we've got a bit of a boost for Rio in mining, and a downgrade finally for Iberdrola in Spain. The utility company had a big surge. Morgan Stanley thinks that's going to come to an end, so they come down to equal weight. And that one's slipping slightly in Madrid for Iberdrola today.
Joe Easton from our equities team, we thank you so much walking us through some of those early movers in the European session. Let's talk about the U.S. pre-market session as well, because we're already getting a couple of movers here as well, specifically in the mega cap names. I'm going to kick it off with Tesla because, of course, we do have one eye on what the ripple effect of the news out of BYD is. Charging a car in about 5 minutes. What does that do to Tesla? Shares are down about 0.6% in the pre-market. Of course, the big heavy hitter today, later today, is going to be NVIDIA and the GTC conference there. We're going to get an update. Some markets are a little bit positive ahead of that, higher by 0.5%. Two others to put on your radar. Broadcom down by about 1.2% this morning, and Alphabet higher by about 0.1% there. What you need to know is that Alphabet has talked about, or is in talks with Wiz, or at least reportedly, for about a $30 billion deal. Broadcom, on the other hand, falling in yesterday's session on a report that Google may work with MediaTek on AI. So some mixed messages coming out of the tech space, Anna.
Okay, coming up on the program, futures pointing to a lower open for the S&P over in the United States, having been through those early suggestions of where stocks individually will go. We'll discuss Wall Street's underperformance this year and how long it might last. That conversation is next. This is Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Welcome back to the opening trade. 18 minutes into our European session, and we have European equity markets tentatively moving higher this morning. Stocks Europe 600 up by 0.4%. The Cetra DAX does well, does better than the rest this morning. Now, the UBS EU defence stocks basket is up over 70% year to date, aided by talk of higher security spending by members of the bloc. And of course, we have that important German vote taking place today. We asked Amundi's CIO if he is increasing exposure to defence stocks.
These stocks are priced for not for perfection, but for something very big to happen. The issue is that yes, there will be more spending. Yes, there will be more business. Question mark is at which margin? Maybe the market has been a little bit ahead of itself here for some reasons, but currently valuations are a little bit demanding, maybe too demanding. So I would wait a little bit.
That was Vincent Mortier, the CIO of Amundi. Let's bring into the conversation Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, visiting us here in Europe. Gina, nice to have you with us. So we have this big day in Germany today with the vote taking place in the Bundestag. And this is around defence. It's also around infrastructure. What is at stake, do you think, in terms of the equity markets, the bond markets, in terms of all of the universe that you survey? What is at stake for people's view of Europe?
Yeah, I think this is definitely part of the story of Europe. It might be being overplayed a little bit as the only story of Europe. If we think back to what really sparked the rally in European equity markets, it started all the way back in November, late November of last year, before we had any resolution of the German fiscal situation, before we had any news of Russia, Ukraine. So this is a longer tale than many people are giving it credit for. It started with a valuation discount that morphed into positive estimate revisions that has become something about fiscal policy. So I do think that the German election was a critical moment, but it was one in a series of moments that has been promoting European equities over rest of world equities. At the same time, you have this ongoing rotation out of quality growth into more low-vol value. That is benefiting certain segments of the world, including Europe, and that's part of the story. The ECB is another part of the story. If the ECB remains somewhat on easing mode while the Fed is sort of more in a stable position, that has a relative benefit to Europe. So it's part of the story, certainly.
Yeah.
But it's not the only story, and I think that's important to note in today's context.
We keep talking about the peace dividend in Ukraine and arguably in Israel and in Gaza as well. How do you price something like that in? Does it actually make that much of a difference in terms of the fundamentals on a micro level?
It does for the commodity providers. So where it tends to manifest itself, where these issues tend to manifest themselves most profoundly, is in commodity prices, in particular in the energy space. So to the degree that this impacts supply and demand, in particular supply inside the commodity providers, it could impact the fundamentals of the equity market. It may have some impact on general risk tolerance. So to the degree that risk tolerance was somewhat constrained in an environment of these elevated geopolitical risks, some stability there could improve risk tolerance at large, though I think that's a little bit of a stretch considering how much markets ripped over the last 2 years while these issues were at bay.
Gonna have to leave it there. Gina, great to see you. Thanks for stopping by to see us. Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. Let's talk about what is happening here in the UK in a little bit more detail. The UK Chancellor, Rachel Reeves, is defending her fiscal rules and her pledges to bring down government borrowing. Reeves spoke to Bloomberg's Lizzie Burden.
Of course, there are costs from any measures on tax, but there are also costs of irresponsibility. And if in the budget last year I hadn't have dealt with the £22 billion black hole that I'd inherited from the Conservatives, if I hadn't have put our public finances on a firm footing, then we wouldn't have been able to increase defence spending in the way that we did just a couple of weeks ago, and we wouldn't be able to weather the global economic headwinds. Yeah. So we made the right decisions in that budget to return stability to the economy. And since the general election, of course, there's been 3 cuts in interest rates, only possible because we've returned stability to the economy.
But do you regret not giving yourself more breathing space against your fiscal rules at the time of the October budget?
Well, in October, we set the fiscal rules for this Parliament that we would balance day-to-day spending with tax receipts, that we would get debt down as a share of GDP. But significantly, we changed the way that we measured investment. So for the first time ever, we count the benefits of investment, not just the costs. And because of that, we were able to invest an additional £100 billion during the course of this Parliament in capital projects, transport, digital, energy, and of course, housing. That's pro-business, that's pro-growth, and it's pro-working people.
But I suppose what I'm saying is, isn't it the job of a responsible Chancellor to build an adequate safety cushion into the public finances so that you can weather the sort of changing world that you've been talking about in recent weeks?
Well, we inherited from the previous government not just a big black hole in the public finances, but the lowest ever fiscal headroom. We increased that headroom in the budget last October because it is important that there is headroom against the shocks that we face. But the fiscal rules we've set are the right ones. They are a robust set of fiscal rules, but it is important that we balance day-to-day spending with tax receipts and that we get debt down as a share of GDP. Those are the right fiscal rules for the circumstances that we face. But when we're spending £100 billion a year on servicing government debt, I don't think anyone could seriously argue that we don't need to get a grip of government borrowing and government debt.
UK Chancellor Rachel Reeves speaking to Lizzie Burton. How's that going to go down within the Labour Party? Clearly, these cuts are going to cause problems politically within the House of Commons. Interesting to see the pound rising this morning. Is that more to do with the Bank of England than what the Chancellor has to say?
Yes, or is it to do with the weakness in the dollar? I mean, it's not overwhelming today, but the euro is also on the rise. So is it really across from that? But on the domestic front in the UK, we'll hear more about welfare spending. There've been a lot of walking us up a hill in terms of the welfare spending cuts that were coming and then dialing that back in recent days. So we'll see how that falls out domestically within the UK. But the euro also on the rise then, Critty, along with the pound, the dollar just on the back foot this morning.
Well, I'm just looking across asset here, and it feels like every American asset right now is selling off. You're looking in the futures picture, you look in the bond market, you look in the dollar, arguably even pushing some of the commodity stories higher. And of course, WTI is underperforming what you're seeing in Brent. So every U.S. asset is on the back foot today.
Does this take us back to the way we started the show? There's two key moments in Europe today. German spending, massive moment for Europe, historic moment. Potential meeting, a meeting taking place between Putin and Trump. What does that do in terms of the signalling around what happens with Ukraine? Feels like a historic day, potentially both positive for Europe.
And does Europe have the regulatory backdrop to try and make the most of this situation, or to try and get the money to where it needs to be? I'm joining dots here between the defence story you're referencing and Capital Markets Union or Savings and Investment Union. And we know that the banking sector within Europe is very animated about the need to kind of bring about some of these reforms to try and make investment and saving and what you do with that money more efficient here in Europe.
Yeah, it gets tricky, because then this is where the fiscal multiplier question comes up, right? That the government can unleash the spend or unleash the rules or whatever. But at the end of the day, the ripple effect isn't necessarily the same degree you might expect, for example, in the United States, or the opposite story in Japan or China,
If you change the rules, potentially it is. There's all this dry powder sitting there. Some of these funds aren't allowed to invest in defence. Maybe that's something that also needs to change as well in terms of getting a greater bang for your buck, or euro for your buck, in terms of kind of the way you bang for your euro. To get the right way around.
You got it.
But there's all kinds of different ways of looking at this, and Europe's got to reform not on one front, but multiple fronts.
It should be pretty interesting. There's so many options of ways to reform that story. There's the consolidation story, there's the joint debt story. Is Germany the solution to the problems that perhaps started in Germany? There's a lot to discuss there. We're going to continue with the banking conversation and talk about one element of that. But we're going to have an exclusive conversation, a conversation with owner Yank BBVA CEO coming up next. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. This is the opening trade. It is Tuesday, the 18th of March. It is a big day in Germany, a big vote taking place in the Bundestag today. Will they get that through on investment in infrastructure and defense spending? That's the key question hanging over markets today. But in the meantime, we go higher, in particular in Germany. So up by 1% on the Xetra DAX. The Stock 600 then pretty up by 0.5%. The euro, as we were just discussing in the last part of the program, a little stronger as well this morning.
A little bit of positivity when we're looking at those European assets today. Does that change and does that stick in the near future? The executive chair of Banco Santander says the Spanish lender may be thinking a little bit differently. Will keep prioritizing the United States and Latin America, perhaps at the expense of Europe. Botín also saying U.S. President Donald Trump's disruptive policies are good for Europe because leaders have been jolted into action. She spoke to our very own David Weston for Wall Street Week.
The U.S. has something really important, which is what I call a growth mindset. So whatever government is in place, it has always been more pro-growth, and you can see that in the growth of the last decade, than Europe. So it's early, but I believe that that is a very positive sign. And as I like to say, Europe is awakening, and the alarm clock has been President Trump. Because what I have never seen is the president of the Commission saying that we're in extraordinary times and we need to take extraordinary measures. So it's not just good for the US, it's good for Europe. What's happening is good for growth, it's good for citizens and, society, because I believe that is, there are other factors that are not as positive, but this is a very positive signal that businesses will be able to do more, invest more, and create more growth.
We do have some talk, for example, from the President of the Commission, as you say, about shifting the mindset in Europe. Are we seeing action yet? And how much of it is being triggered, frankly, by what's going on in Ukraine? And European countries deciding they really have to step up and spend more on defense?
It's a combination. I think geopolitics and what's going on in Ukraine, but also the economic, let's say, policies of the U.S. administration. So I think both of those are drivers for what I see as, the German awakening, the lifting of the brakes on debt. Germany lifting the brakes on debt is the best signal that Europe means business. And, well, the other one is Brussels, as I was mentioning. And by the way, finally, the German election means Germany and France are aligned. So you have 3 very powerful drivers for a change in the trend of European growth. And I think it's driven by both Ukraine and geopolitics, but also by what's going on the economic side.
Anna Botín, Executive Chair of Banco Santander, speaking to our very own David Weston for Wall Street Week. We are very excited to hear more of that conversation. You can get a full play out online and, of course, on the Bloomberg terminal. Let's stick with the banking conversation, specifically in Spanish banking. Pleased to say BBVA, I'm going to say that right, CEO, owner Gensch joining us around the table. Welcome. I think it's the first time we've had you around this table.
It is the case, yes. Thank you. Thank you for having me.
Of course. It's a thrilling time to have you as well. We're usually here talking to you about earnings, but we, I think, are quite deep in the defense conversation and what this very volatile world looks like at the moment. You have a front row seat to it, first from the European perspective and perhaps the defense spend that's going to come from the likes of Germany, but then also from the tariff perspective and the read-through over into Latin America as well. What is top of the agenda for you? What are you worried about? What keeps you up at night?
Well, I mean, we are in multiple countries. As you know, we are an international bank. 2/3 of our profits come from Spain, from Europe, but the rest, 1/3 comes from Spain, 2/3 from the rest of the world. So we are a big bank in Mexico. We are a big bank in Latin America. So the tariff situation, we have to see the bottom of it. And in Europe, we have to see whether all the promises that are being raised at the moment, they're going to be realized.
Is this a defining moment for Europe? Do you feel that it is?
It is a defining moment. I'm here for a conference in London. Yeah. The title of the conference is The Moment of Europe. So we'll see.
So what does that look like in reality for you? Are we going to see, finally, are we going to see a lot of coordination on defence? Are we going to see that translating into a lot more coordination in other areas? If Europe wants to unleash its potential, it needs to do things like the banking union. It needs to get capital markets union off the ground. It needs to figure out how it's going to work better with London. London looks like it's going to work better with Europe on the defence front. Does that translate into other stories? Yeah. How far does this go? How quickly does this go?
Well, there are two themes, actually, in my view, that are emerging after the new administration policies in the US. One theme is self-sufficiency. Self-sufficiency in defense, in energy, and so on, which means there are a lot of investments. And the second theme that has to come up is competitiveness and growth. Europe is lacking growth. I mean, the estimate for 2025 is 0.8%, which is much lower than what we have been seeing in the US, in other parts of the world. So Europe has to get its act together in growth and in self-sufficiency. That's the whole discussion. But would Europe coordinate within itself to be able to do this? That's the key question that we are facing.
Yes, and I know part of that coordination is around defence and spending enough money on defence. Do defence stocks, defence businesses need to be further rehabilitated in the views of investors, for banks, asset managers? Is it easy enough to do business with them, or do we need to get rid of some of the hurdles to that maybe have been built up over recent decades?
It is easy. It is relatively easy to do business with them, but the key problem that we see in the European defence sector, to be specific, is once again, like in any other sector, we lack champions. We have a defense company in Germany, we have a defense company in Italy, in Spain, in France, and as the famous Draghi and Letta reports point out, we need European champions. That's the key thing. I mean, if they need more capacity to borrow more.
Do you need an Airbus for Europe in defense? Is that what we need?
Say it again?
Airbus for Europe?
Maybe, yeah. We need European champions. Again, the European champion topic is an important one, because when you get to scale, then you would be benefiting from the benefits of that scale.
Okay, so European champions on the defence space would help. European champions on the banking space might help as well. Does that take us further to the savings and investment union? I think that's what we now call the capital markets union. Does that take us further to a place where we get bigger pools of money that can be more efficiently used to fix Europe's problems?
Precisely. I mean, we do have a subjective bias on this topic, I would presume, but we do need that scale also in the banking industry. Once again, Europe needs investments. Who is going to be channeling that investment to the ones who need the investment? The banks. 75% of the corporate borrowing in Europe is coming from banking, which is 25% in the US. We need to develop the capital markets, number one, and we need to make sure that we have European champions in banking as well.
But it seems hard enough to do domestic M&A, let alone cross-border, to create European champions.
Well, I do think the governments in general, they will see the benefits of domestic consolidation as well. Again, once again, we need investments in Europe. We need the financial sector to support that.
We're talking about this for almost a year, certainly. And in your case for Sabadell, you've led me nicely there. Talk to us about the timing for the Sabadell deal. We're talking about a bid that was put in May of 2024. We're still waiting for some sort of regulatory approval here. What are you hearing? Do you have an idea of when that deal will potentially get approved?
I mean, obviously, we are dependent on the authorities here, but we are at the final stages of this. The competition authority of Spain is the final authority who would decide on this in terms of the formal approvals. And we are in the last inches, basically. In the next few weeks, we expect a decision from the competition authority. Then the government of Spain, can choose to review the case. And then we start what we call the acceptation period, where the rightful owners of the decision, the Sabadell shareholders, they will decide on whether they would like to tender their shares.
What kind of time frame are you looking for that final tender?
The acceptation period, in our view, again, we are dependent on authorities, but it should be happening in the last piece of the second quarter.
All right, talk to us about what that deal actually looks like. When you first set out for this deal, we talked about bringing Sabadell under the umbrella of BBVA, really getting rid of a lot of the kind of extra IT costs, extra labor costs, extra branches, et cetera, and that's where something like 800 million euros of synergies comes forward. There's a question right now of whether that kind of meshing process takes place in full. Is there a possibility of keeping Sabadell as a subsidiary and not going through with a full legal merger?
There are two scenarios there. I mean, we fully merge with Sabadell, or we keep it as a separate subsidiary, as you just mentioned. Independent of the case, obviously the first one would be better, but independent of the case, the synergies would come along, in our view. And most of the synergies that we laid out, as you said, 850 million euros a year, it is mainly technology related. And in both scenarios, those technology savings can be realized in our view.
To the same extent? To the same?
Not to the same extent, but to a large extent, yes.
So which of those two scenarios is your main scenario?
The base case scenario is that there's a full fusion, full merger after the process, of course.
And have you gotten clarity from the markets authorities or the Spanish government, for example, that that is where this is headed?
It's too early for that one because that decision will kick in after the acceptation period. The government has 6 months after the acceptation period, after the deal is complete, to decide on this. So it's too early on the clarity of that decision.
And Onur, this makes you more domestic, this deal, or it will do if it goes through. But then on another front, on the investment banking, corporate investment banking side, CIB, you are busy expanding outside of the Spanish market, the US and the UK. Where do you continue to grow that business? How much appetite for growth do you have?
We grow it across the board, but the key growth areas in the past 2 years has been US, because there's a lot of capital markets activity there, and as we are a global bank. We have operations in 28 countries, but US is very critical in the capital markets activity. We are growing it in the UK, we are growing it in Asia, and lately we just opened an office in Brazil. In Latin America, that's the only piece that we were missing, so we will be covering the full Latin American market. Going back to the transaction, given the fact that we are in 28 countries, we do think that a larger BBVA is also good for Spain. It's good for Spanish companies, because any Spanish company who would like to do business in those 28 countries that we have a presence, they will be benefiting from the presence that we have there.
The criticism of that, though, is that it's going to affect consumer lending rates. That's the criticism that's come from both the Bank of Spain and the Spanish government as well, in terms of concerns around this consolidation. How sure are you that under one less player in Spain, you can still provide the same sort of consumer lending rates?
Consumer lending or beyond, I mean, when you look into the rates, if we are factual on this topic, Spanish market is very competitive. If you compare, this is ECB data, the lending rates in Spain, in mortgages, in consumer, in SMEs, in corporates, it is much lower than Europe. It is much lower than Germany, which has hundreds of banks that we have there. So to start with, the competition, Spain is a very competitive market to start with. But beyond that, we did hear these concerns. We appreciate those concerns. We understand those concerns. So we have submitted an unprecedented list of remedies for this transaction to go through, an unprecedented list that has volume guarantees. So the SMEs, which is the core topic here, the SMEs, they would not be seeing a reduced lending space for them. And the pricing guarantees, which is quite unusual in these type of transactions, we have submitted those remedies. We do think that the competition concern that the authorities have should have been dissipated already with those remedies.
Oh, no, it's been great to see you.
It's great to be here.
Come back anytime. You're more than welcome. Nice to see you around the table here in London.
Thank you.
Onur Genç, the CEO of BBVA. Thank you very much. Coming up, we're going to speak exclusively to the chair of the French Markets Authority. Similar conversation. We're going to be talking about regulation, about the impact of geopolitics, tariffs. What are we going to do in terms of this capital markets union? When is that going to happen? What's it going to look like? All of that coming up. This is Bloomberg.
would it mean for India to host the Olympics?
Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back. This is the opening trade, 8:45 here in Europe. So 45 minutes into that opening trade for Tuesday, the 18th of March. And European stocks go higher. US futures do point a little lower, off earlier lows, but E-minis and NASDAQ futures down around 0.1% this morning. Guy, auto parts going higher, but part of that is actually a defense story. It's about M&A speculation within the defense sector.
In the truck sector, what's happening in that space? The BYD story maybe not having the effect that maybe we would have anticipated. Let's talk about the broader markets and figure out what is happening. French shares have soared this year. So year to date, we're up, let's call it 10%. Germany has outperformed. French shares have underperformed the broader markets a little bit here in Europe, but it's been a stunning performance. Of course, the turnaround follows months of political turmoil, which hit French stocks hard and weighed on investment and hiring in the country. France's market authority says this year it is focusing on boosting the appeal of France as a financial centre after a difficult 2024. Marie-Anne Barbet-Léani is the chair of the French Markets Authority, the AMF, and joins us now. Marie-Anne, I want to talk about the bigger European story, first of all, only because today feels like the day that maybe we should do that. Do you have a sense at the moment that France, along with much of Europe, is ready to make big decisions, to work together in a way that we haven't seen maybe for the last few years, that finally we could see Paris, London, Frankfurt becoming more aligned in terms of the financial centres of Europe rather than maybe less aligned? Is this the moment?
Well, yes, it is clearly the moment. We've been preparing for that moment for many, many years, but now with the, especially with the Capital Market Union project in the EU, it's been rebranded as the Savings and Investment Union. And well, this is really the moment because tomorrow the European Commission is going to publish its strategy to relaunch this important project. And I would say that the general context is certainly a very important trigger to make it finally happen. So
what do you need to do?
Know if you have...
What needs to happen at the AMF? Sorry, what needs to happen at the AMF to make that happen? What do you need to do within France to further that process?
Okay, so the IMF has been strongly involved in two aspects, I would say, and we are more committed every day. One is to be, I would say, aware of the competitiveness subjects for the Paris Financial Center. And that is something that is in our strategic plan for these 5 years. But I would say nowadays the most important aspect is at the European level. And we've been strongly involved in producing ideas, suggestions, proposals to make sure that this time we get it right in the EU with the development of European markets. And I put an S because I mentioned the French market, and obviously we are very willing to support the development of the French market. But what we have now that is clearly even more important, I would say, is the need to develop European markets, EU markets, and this is going to be a few markets, and all markets have their role to play in developing the financing of European economy.
And so, Marie-Anne, does that mean the AMF and other regulators, if I could just ask if the AMF and other regulators are ready to pool their regulatory powers, I suppose, to create what Mario Draghi has called for, some kind of European SEC, to have these things regulated at a higher level?
Exactly. That's one of the major points. We, as national regulators and as the French regulator, we are fully ready to relinquish some of our national powers and transfer them to ESMA, which is the current EU regulator, but has very few supervisory powers. It is mostly a regulator, less of a supervisor, and for at least 3 reasons, we feel it's now urgent to have more powers transmitted to ESMA. The 3 reasons, and I can then expand on that, are, first of all, of course, regulators or supervisors don't create markets, but having a fragmented supervision for markets in the EU is certainly not helping. So obviously, this is the major contributions that supervisors can make to the savings and investment project. Second, from a financial stability and investors' protection point of view, the current architecture of supervision is not optimal. And third, we need to cut red tape. We need to have less administrative or regulatory burden. And we will not be able to achieve that rapidly if there is not more power to one supervisor in the EU.
Okay, and Marie-Anne, with that in mind, politics seems to have become more nationalistic globally and in parts of Europe as we talk about that very often. What is the best pitch for the Savings and Investment Union to European electorates? Because it feels like there's a disconnect. The finance industry is calling for more union, whereas voters are often calling for less. How do you pitch SIU to voters in Europe?
SIU is needed because we need more money. And obviously, we are in a global situation with global markets, large markets in the US, in the UK, in China, in Hong Kong, in India now, developing very rapidly. So EU is really the right perimeter to develop financing. And we need more money. We need more money to finance digital transition, sustainability transition, and obviously now, more and more so, our defense effort, which is obviously something that we all see as a new, very strong need in the EU. And that is not going to happen only if national markets are involved, but it's going to happen if all EU markets can develop more and produce more financing for Europe to simply have the means to develop its political objectives. Money is obviously not an aim in itself, but it is absolutely necessary to be able to finance all the objectives of the European Union. And if I may add something, it's also in the interest of investors to have access to larger, more liquid and better value in the financial markets. What we see is that very large markets, like the US markets, offer more value to investors than smaller markets. So we need to have this network of European markets that will all develop and produce more value for investors.
Marianne, great to catch up. Look forward to the update tomorrow as well, coming out of the Commission. But it's interesting to hear the French take on all of this. Marianne Barbat-Léane, the chair of the French Markets Authority, the AMF.
Well, in about 10 minutes' time, German lawmakers are going to begin to debate a crucial plan to release defense spending from debt restrictions and set up a 500 billion euro fund for infrastructure investment. Let's get more on this. Bloomberg's Oliver Crook standing by for us in Berlin. Ollie, walk us through what's at stake here for Germany.
Yeah, listen, Kriti, we talk a lot about sort of these paradigm shifts and seismic changes in sort of policy across the world. This is truly that. This blows apart two sort of really ancient and sort of historic taboos for Germany sort of in one fell swoop. The first is remilitarization. This is a massive effort for the German government to remilitarize. This is obviously a very fraught issue within Germany, but also within sort of the broader world and in Europe after the Second World War. And of course, then blowing to pieces the sort of fiscal discipline, the fiscal rigor of the debt brake in the Constitution since 2009. What we're talking about today, if this goes through, and the anticipation is that it will go through the Bundestag a little later this afternoon, setting up that 500 billion euro infrastructure fund. 100 billion of that is going to go towards sort of climate initiatives. That's what Merz needed to give the Greens in order to get them on board. But then the sort of big ticket item here is the defense spending. There is basically no limit on how much spending can be debt financed now in Germany in terms of defense, and the sort of definition of defense has also been expanded to be very, very wide. So when we think about what's going on here for Germany, this is a really sort of massive move. We're going to have that debate that begins in the next 5 or so minutes, the vote later in the afternoon. Then it will go to the Bundesrat, which is the upper house, on Friday, and then after it passes there, it will be signed into law, and the sort of new era of fiscal spending of Germany will begin.
Thanks very much, Ollie. Bloomberg's Oliver Crook with all that you need to know about the vote that is still to come. It looks then, Guy, as if Friedrich Merz should have the votes that he needs here. What is it, 31?
31 buffer.
31 buffer, so more seats than he needs to get this through. If all the parties, CDU, CSU, the Greens and the SPD, if they all vote along party lines, then it should be smooth. But we will see. The markets will certainly be watching this very carefully.
And the Constitutional Court will throw that in as well. Seemed to rile maybe the long end of the bond market yesterday. We'll see whether maybe that's a continuation that we need to watch after this vote. Maybe that's a kind of little thing hanging over what Germany's going to be doing.
Yeah, roiled the bond market, but still kind of unsuppressible, it feels like. It feels like the yields here are defying gravity, for lack of a better term. And you're seeing the same thing in the equity market here, higher by 0.9% in the DAX, outperforming the rest of the continent in a fairly big way.
Yeah, German stocks doing okay with that in mind. Some of the parts makers for the auto sector doing okay. European stocks then on the front foot this morning, the German market in particular up by 0.9%. That's it for the opening trade. The brief is up next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Danny Berger. Managed Cranny is off today. Welcome to Bloomberg Brief. Let's set your agenda. Ceasefire talks. President Trump gears up for a call with President Putin. Israel strikes Gaza, ending the truce with Hamas. Caution and order. U.S. Trade Representative Jameson Greer attempts to minimize tariff chaos ahead of the April 2nd rollout. And German lawmakers vote on unlocking hundreds of billions of euros in defense and infrastructure spending. We'll talk infrastructure opportunities with KKR head of real assets, Raj Agrawal, later this hour. So stay with us for that. In the meantime, it is a future session that is starting to weaken after we somewhat came back from that correction. 2 solid days of gains, unchanged on your S&P 500 futures session, little change on the NASDAQ 100. By the way, Bank of America's latest fund manager survey, investors/U.S. equity exposure by the most in record in recent weeks. Fund manager allocation now 23% underweight. That is the lowest since June 2023. So the sentiment is hurting, but maybe helping sentiment this morning is that Jameson Greer is trying to reinstate a more process-oriented approach ahead of April 2nd. It was mixed data yesterday, therefore we got a mixed bond market. The 10-year fell yesterday, while the 2-year yield rose. Little movement this morning, higher by a basis point. We're at 4.31 on your 10-year yield. Oil moves to a 2-week high, edges higher following Israel's military strikes in Gaza. And gold closed above 3,000 for the first time ever yesterday, and we stay above there at $3,026 an ounce. Some individual stocks to keep an eye on this morning. Alphabet, that is certainly one of them. It is unchanged this morning, but sources say that it restarted discussions to purchase cloud security company Wiz for a $33 billion deal. That would be Alphabet's largest acquisition to date. Meanwhile, Capital One is paring some of its losses that it had yesterday down just 0.1%. There's a report that staff at the U.S. Justice Department had concerns about their $35 billion merger with Discover Financial. So much for a lighter touch when it comes to regulators. Finally, a check on Lucid. Let's get a look at those shares this morning. It is up 2.78%. The EV maker was upgraded to equal weight from underweight at Morgan Stanley. Morgan Stanley saying that they see potential for the stock with new leadership that can put forward an executable AI strategy. So I mentioned we bounced back from a correction, at least 2 solid days of gains. Does it last? The sentiment seems to be turning, and economic sentiment in particular. A growing choir of economists have been slashing their U.S. GDP forecast this year. Here's just some of them. The OECD cut its outlook to 2.2% from 2.4% on Monday, citing tariffs. That follows downgrades from Morgan Stanley, from Goldman Sachs, from Macquarie, from RBC. BNP Paribas writes, quote, "The outlook has worsened because of a surge in uncertainty that is having a chilling effect on consumption and investment decisions." Pleased to say joining us now is Isabel Mateos-Ilago, Chief Economist at BNP Paribas. Isabel, wonderful to see you this morning. The downgrades are coming. What would it take for you to reconsider your GDP outlook for this year?
Good morning, Danny. Look, it's not going to take very much because, in fact, we'll be publishing a revised outlook very soon. And I guess we'll be joining that choir that is revising down our growth forecast for the year. And really more than well, it is a revision, but it is really pulling forward our assessment of how the economy was gonna play out this year and next. What's happened is we, and I think many others, were expecting the bulk of the tariff action to come much later in the year. And actually, it's been coming fast and strong. And as a result, the negative impact on growth of that uncertainty is being pulled forward as well. And so, yes, you can expect us in the numbers that we'll publish very soon to also revise downwards our GDP forecast for 2025.
That's a great tease, Isabel. Really looking forward to when those numbers and the accompanying note comes out with it. In your assessment of a worsening economic picture, how much of it is about tariffs and how much of it is just about the uncertainty of it? Isabel, in other words, if we get to April 2nd and there's a tariff policy which is clear and cohesive and not the one-offs that we've been seeing, is that enough to stave off some of the worst of economic declines?
So we are probably getting to peak uncertainty. I'm not sure we're there yet because, sure, we'll get some announcement on April 2nd, but it's not as if things are going to stop there. There's going to be an announcement. People are going to try to work out how to make sense of it, but then there's going to be a response, and then there's going to be negotiations. And so I don't think it would be realistic to expect uncertainty to start decaying right away. But yes, as we get through the year, as we get more data points, uncertainty will hopefully start to diminish, and activity can resume at a more normal pace. But it's true that right now, whether you're a consumer or a corporate, it's very hard to make any decisions, and so the economy is a little bit in pause while waiting for more clarity to come. And that's true about tariffs, but that's true, by the way, also about fiscal policy.
Well, on that point, we're going to get a Fed decision this week. It's crazy how busy this week has already been, even though it's a Fed blackout period, Isabel. This is supposed to be when everything is calm. The Fed faces a tough decision. Neil Dutta from Renmac, I think, put it really interesting about the politics of this decision, saying that if the Fed is hawkish, markets will probably weaken further, and as a result, they'll take some of the heat off the White House for the recent sell-off. If they're dovish, they may well encourage the administration to dial up the heat even more. Thus, it's best to say nothing. Isabel, in other words, politics dictates that the Fed literally tries to do nothing in this rate decision. Would you agree with that?
Well, I mean, there's doing nothing and saying nothing. I think saying nothing, unfortunately, for Jerome Powell is not really an option. Doing nothing is exactly what we think they're going to do, and in fact, for quite some time, because they are facing a difficult balancing act. Yes, there are signs the economy is slowing down, but even more importantly, there are signs that inflation expectations are getting de-anchored, and that's very, very serious. I mean, it was one thing to look at inflation falling very, very, very slowly towards target and to kind of say, well, yes, it's falling slowly, but it's falling. It's quite another to see the latest survey of inflation expectations showing them at multi-decades high. This is something the Fed cannot stand idly by. This is, you know, the Fed's legacy is at play here. And so I think they have to take that inflation risk very, very seriously. But as you noted, without overdoing it, without coming across as overly hawkish, because then they would tilt, they could get that balance wrong. So it's going to be, as ever, a very tricky balancing act for Jerome Powell tomorrow. But he's shown us that he's very good at that. So let's see. But in terms of action, we do think they're going to be on pause for quite some time, quite simply because of this issue with inflationary expectations being too strong.
Is there a risk then, Isabel, if the Fed is stuck between inflationary forces and higher expectations? I mean, it's this mix we saw in the University of Michigan survey, right? And concerns of an economic downturn. Does policy stay too tight? Does them doing nothing, in essence, do something to this economy that is getting tightening fiscal and at the same time, maybe monetary policy that's too tight for the current environment?
Well, actually, I would think of it almost the other way around, in the sense that with inflation expectations rising, and it's not just households, if you look at break-even, they've been rising as well. If they keep monetary policy on hold, actually policy is easing. So it's not quite the way you described it. The other thing to keep in mind that is quite different from the recent past is, remember the Fed's mandate is maximum employment. It's not maximum growth. And the reality is immigration flows have been plummeting. And so the break-even rate in terms of job creations is almost certainly quite a bit lower than it was over the last 4 years, probably closer to 100,000 or even lower than that, than 200,000. And so you could see a weakening of growth, a weakening in job creations that the Fed wouldn't think, okay, this is not a worry because actually the unemployment rate is not moving very much. And so that's fine with us. We can be on hold.
Isabel, this has been so excellent. Please come join us again. We could talk for hours longer, I am sure. Isabel Mateos-Ilago of BNP Paribas. Let's get you up to speed now on some other stories that are trending on the terminal this morning. German lawmakers will vote today on a bill that is set to unlock hundreds of billions of euros in debt-financed defense and infrastructure spending. Chancellor in waiting, Friedrich Merz, and the Social Democrats sealed an agreement with the Greens that should secure the two-thirds majority needed for the law to pass. President Trump says President Xi Jinping would visit Washington soon in the not-too-distant future. Discussions between the two countries have been stuck at lower levels. Both sides are deadlocked on how to proceed. A Chinese Foreign Ministry spokeswoman said that she had no information to provide on a potential Trump-Xi meeting. Elsewhere in China, Bloomberg sources say that Chinese authorities are investigating CK Hutchinson's sale of its overseas port businesses. It signals that Beijing is not happy that the Hong Kong conglomerate divested its Panama operations under U.S. pressure to BlackRock, among others. Several agencies are looking into potential security breaches or antitrust violations. It's not clear at this moment what levers China can pull in order to block this deal. Coming up on your Bloomberg Brief, Presidents Trump and Putin are set for talks today. On the agenda, Ukrainian land and assets. Stay with us. We'll have more on that next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
We'll be talking about land. We'll be talking about power plants. That's up, it's a big question. But I think we have a lot of it already discussed very much by both sides. We're already talking about that, dividing up certain assets.
President Trump speaking on Air Force One about today's talks with his Russian counterpart, Vladimir Putin. Land and assets are on the agenda. For more, we are joined by Bloomberg's Russian economy and government editor, Greg Sullivan. And Greg, this call will be coming in a couple hours' time. IFX reporting that Peskov says that it will happen at 9 a.m. Eastern. That's 4 p.m. local time in Moscow. What's on the agenda for this conversation?
Well, we know a few things are on the agenda. Obviously, the big one is the 30-day truce that Trump has gotten Ukraine to agree to. He's now seeking to get Vladimir Putin's buy-in so that they can continue on this process. Now, there are certain conditions that Putin wants to demand in order to agree to this, and some of which Trump alluded to. He said that the two would likely discuss land considerations. Now, both sides have had red lines on certain territorial demands. Obviously, Russia is demanding to keep the land that it has seized, while Ukraine is hesitant to give up any sovereignty over over its own land. So it's hard to see how an agreement will be reached there, but we do know that territory is likely to be discussed, as is a power plant that President Trump alluded to, a nuclear power plant, the largest in Europe.
Well, Greg, President Zelensky of Ukraine had wrote on X, he had a conversation with Macron saying that Ukraine is ready for an unconditional 30-day ceasefire. However, for its implementation, Russia must stop setting conditions. It sounds like Russia is coming to the table with conditions. What role, if any, is Ukraine going to be playing in its own future, in its own ceasefire talks?
That is absolutely right. Russia is coming to the table demanding a lot. They are trying to come from a maximalist position. Some Western analysts have assessed that Russia is making these demands, which are very hard for Kyiv to accede to, because they are calculating that they can continue fighting. Right now, Russia has been making slow, albeit costly gains in the east, and they've almost successfully dislodged Ukrainian troops from large areas of Kursk that they had occupied after a surprise incursion. Putin is likely calculating that this strengthens his hand at any future negotiating table. We have reported that Putin is likely to play for time, has been playing for time in this process, and maximalist demands are definitely a part of that.
What do we understand about what sort of security guarantees might be on its way for Ukraine? Because this had been something that they'd appealed for, the idea that they wanted to make sure they weren't set up for failure after any sort of ceasefire or any sort of negotiations. Does the U.S. seem willing to provide that, or any of its allies?
That is actually the key question heading into all these negotiations. Kyiv has been very insistent that security guarantees need to be strong enough to deter future Russian aggression. They do not want a ceasefire to set up the potential for the resumption of hostilities down the road at some future time. But it's really hard to see what the two sides can actually agree on. While we know that the UK and France have been leading efforts to try to create the framework for a peacekeeping force that could be in Ukraine after any such ceasefire, Russia has categorically rejected having NATO troops on its territory, saying it needs troops from neutral countries. Furthermore, as you mentioned, it's unclear the U.S. would provide any backing for security guarantees. Members of the administration have already ruled out putting boots on the ground, and Trump just doesn't seem interested in providing those guarantees. Yet Europe says that they need the U.S. support to make those guarantees effective. So it is a very tough and sticky question, and will be at the center of any negotiations for especially a longer-term settlement.
Again, the talks between Putin and Trump set to kick off at 9 a.m. Eastern. Greg, thank you so much for setting us up ahead of it. That is Bloomberg's Greg Sullivan. Now, elsewhere in Washington, President Trump's top negotiator, Jamieson Greer, is attempting to bring some order ahead of the imposition of sweeping new tariffs planned to be announced on April 2nd. For more, we're joined by Brendan Murray, who tracks trade for Bloomberg. So, Brendan, the team's reporting suggesting that Jamieson Greer is trying to come in again and bring this order. What difference does that make as we approach the April 2nd deadline?
Yeah, that's right. So when you listen to President Trump describe reciprocal tariffs, he says that it's very simple. Whatever you charge us, we're going to charge you. But the reality is it's a lot more complicated than that when you go country by country and weighing up the average tariff rate of each country, and then you factor in non-tariff barriers, things like value-added taxes and environmental regulations and all these other grievances that the U.S. has. You start doing that country by country, and you wind up with a really messy bureaucratic situation situation. So what we're reporting is that the U.S. Trade Representative Jamieson Greer is trying to establish some semblance of order here. We're just about 2 weeks away from Reciprocal Tariff Day, which Trump has called a liberating moment for the U.S. economy. So, and that's going to be important because markets obviously are reeling in some of this uncertainty. Companies are indecisive about investments that they want to make, and of course there could be legal challenges ultimately to whatever the president, however the president decides to pursue the application of tariffs. So inside the White House is a very fierce debate going on right now about how exactly they're going to roll these tariffs out.
And speaking to that debate, Brendan, because there's been this drip feed of reporting about what it would actually look like. The Journal having a story overnight saying that at one point this idea of having different tiers of tariffs was considered to make it more simplified. What does it suggest? The fact that we are just mere weeks away from this deadline and that debate is still going on in terms of what it actually looks like?
Yeah, I think what it suggests is they're not going to be ready for the full execution of the plan in 2 weeks. But what we'll get is the beginning of, a longer process, more investigations, more reviews that will lead to tariffs down the road. Obviously, they're building April 2nd up to be a big announcement. So we should expect news on that day. But as far as the implementation of tariffs, it sounds like it's so complicated that they're going to need a lot more time to get everything in order, make sure it's legally compliant, and to make sure that they don't have to walk this back 3 months, 6 months down the road and create even more confusion.
What does that mean, that confusion, for nations putting reciprocal tariffs back on the U.S.? We got that initial spat of them from Europe, from Canada. What are countries doing gearing up for April 2nd?
Well, countries are taking a couple of different tacks. They are trying to talk with the administration, reaching out, sending delegations to Washington, the typical sort of shuttle diplomacy. Others are getting their retaliation lists together and saying, how can we hit back in a way that will be effective and not just provoke another escalation? So there's a range of responses that countries are coming back to Washington with, and some are, like Canada, are confrontational and aggressive. Others are more on the diplomatic side. But it's yet to be seen which one of those approaches will actually work with Trump.
Brendan, thank you so much. A lot might happen in 2 weeks' time, and the lead up to 2 weeks' time on the April 2nd deadline. Bloomberg's Brendan Murray. Coming up, a long-awaited return to Earth. The NASA astronauts are coming home finally after 9 months in orbit. We're going to have more on that story next, and your front pages here on the Bloomberg Brief.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot?
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just you're singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back to Bloomberg Brief. Let's take a look at some of the front pages this morning on your Tuesday. First up, the Bloomberg has this, that President Trump picked Fed Governor Michelle Bowman, confirming our earlier reporting, to serve as the central bank's vice chair for supervision. Bowman is expected to sport a lighter touch on bank regulation than her predecessor, Michael Barr. She said if confirmed, she will promote a safe and sound banking system with a transparent and tailored bank regulatory framework that encourages innovation. Next up, the Financial Times has this on their front page, that hedge fund short sellers have made $16.2 billion betting against Tesla shares over the past 3 months. Tesla's market value has plunged by more than $700 billion over the same period, wiping out $100 billion from Musk's net worth. The recent profits for short sellers do mark a partial reversal, which has been highly painful for them over in recent years. Now, finally, the Wall Street Journal has this. The astronauts are coming home. Butch Wilmore, Suni Williams departed the ISS after 9 months in space. It was only supposed to be a couple days. A SpaceX vehicle carrying the astronauts undocked from the ISS just after 1 a.m. Eastern time, putting them on track to splash down near Florida just before 6 p.m. ET. What a big greeting I'm sure they are set to get. They arrived at the ISS last June on a Boeing spacecraft. Again, the plans have been to stay for a week. There have been issues, but they're finally coming home. And we're all looking forward to greeting them in Florida when that happens. All right, coming up on the show, we look at a Google merger.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Ceasefire talks. President Trump gears up for a call with President Putin. Israel strikes Gaza, ending the truce with Hamas. Caution and order. U.S. Trade Representative Jamieson Greer attempts to minimize tariff chaos ahead of the April 2nd rollout. And German lawmakers vote on unlocking hundreds of billions of euros in defense and infrastructure spending. We'll talk infrastructure opportunities with KKR head of real assets, Raj Agrawal, in just about 10 minutes' time. Little change, basically calm to a little bit lower on your S&P 500 futures session. That's after 2 consecutive days of gains. By the way, a new Bank of America Investors Fund Manager survey coming out, slashing U.S. equity exposure by the most on record in recent weeks. They are now 23% underweight. For your bond market, it was a mixed picture with U.S. data. Retail sales were weaker. The control group was above expectations, so your 10-year yield falls while 2-year yield rises. That somewhat reverses this morning. Your 10-year yield up 1.7 basis points at 431. NYMEX crude, that goes to a 2-week high, up 1.33%, following Israeli military strikes in Gaza. And gold, that is holding about $30,000 an ounce. It crossed that level, closed at that level yesterday for the first time on record. Now let's get back to our main story with U.S. tariff disorder having been a feature of this month. But President Trump's top trade negotiator is attempting to do something about it. Ahead of the sweeping new tariffs being imposed next month, Bloomberg sources learned that U.S. Trade Representative Jamieson Greer is looking to wrestle control of the planned April 2nd announcement. For more, we are joined by Michael Shepard in Washington, D.C. Shep, so great to see you this morning. It's a difficult task for Jamieson Greer, considering he was only confirmed at the end of February. What is the roadmap ahead of him to try to get that control back?
Well, it's a complex one, Danny, because coming up in less than 2 weeks, as we've been discussing on this program and before, is this April 2nd deadline to come up with what Trump has called reciprocal tariffs, as well as levies on a series of other industries, including autos, semiconductors, and pharmaceuticals. And the reciprocal tariffs are going to be the most challenging one, as our colleague Brendan Murray was just outlining. It's simple on its face that we charge them what they charge us, as Donald Trump has tried to put it, but really that belies its complexity. In fact, when you think about the wide range of products and the various kinds of tariffs, and even some of the taxes like consumption taxes and value-added taxes that the administration has also targeted, trying to calculate exactly how much to hit each country and hit each good with among the thousands of goods and hundreds of potential countries that could be subject to these levies, it's complex. And he wants to be sure that there is less uncertainty in this process going forward than there has been so far. The start of the administration has been defined by Trump's tariffs, but the rollout has been characterized by a lot of chaos and uncertainty in the markets and for businesses. And Jamieson Greer is trying to hear from businesses and get their input ahead of time to try to stave off some of the last minute, really frightful moments for industries like autos, which saw, really potentially devastating consequences to their supply chains and to their pricing plans with the Canada and Mexico tariffs, for instance. But you multiply that kind of uncertainty across industries, and that was what he is trying to avoid.
And let's be honest, it's not just industry that would welcome some order. It certainly would be investors, too. It's something we keep hearing. It's uncertainty that's the problem, more so than perhaps even the tariffs themselves. But, Shep, has it been an issue of just Jamieson Greer not being there, that it wasn't until the end of February, that's part of the reason that we've had this bumpy rollout? Does it change now that he's there? Or do we still have these competing forces between Navarro and Lutnick and Trump himself that might still lead to bumpier rollouts?
Well, there is an element of that. You know, when you think of the president and certainly Peter Navarro, they're known for shooting a little bit more from the hip and then asking questions later. And we've seen some of the consequences and price of that approach in the past weeks, with the market really taking a turn for the worse. The downdraft has hit equities, especially in the tech sector, but really across the board as people grow concerned that the impact of tariffs could be not only higher inflation but slower growth and perhaps weakening demand by businesses and by consumers who are eyeing all of this uncertainty. So now this may put him kind of at loggerheads with some of those forces, but at the same time, the Trump team is also looking at some recent polling numbers, including from NBC News, that signal that Americans are growing a little bit less comfortable with Trump's approach on the economy. The NBC poll, in fact, 54% of registered voters that they had surveyed were disapproving of the president's handling of the economy so far. And that isn't a figure that the new administration wants to see so early in the game.
Yeah, of course, also showed a cratering in opinion about the Democrats, too. Hey, Shep, before we let you go, I just want to wrap up what the agenda is for the White House. And around 9 a.m., we're going to be getting a call between Trump and Putin. What are we expecting?
Well, this is a crucial early call between Trump and Putin to get the ball rolling further on what Donald Trump hopes to be an end to the war in Ukraine. It's something he's promised voters during his campaign, and he has managed to get Ukraine to agree to a 30-day cessation of hostilities. Now the job is to get Vladimir Putin to go along. One of the concerns in Ukraine and among its European allies is that Donald Trump may be giving up or be prepared to give up too much in this early discussion with Putin. And that includes some of the things that we know about, Danny, the question of territories in the east and Crimea, that Putin may just insist that, look, if you want 30 days of ceasefire, those have to be off the table right away, as well as getting an early agreement on caps on Ukraine's military, the size of its military, as well as foreclosing the possibility of Ukraine's eventual membership in NATO. And those are points Ukraine would not want to see given up so early in the discussions. And then there's also the question of energy assets, including a key nuclear plant that, is at risk of being in play as well, and that Ukraine also does not want to see handed over to Russia too early in the process without some concessions and guarantees built into the process.
That call in about 3.5 hours' time. Michael, thank you so much. Bloomberg's Michael Shepard helping us set up for the day in Washington, D.C. Now let's look at some stocks that we're keeping our eye on this morning. Alphabet among them. Little change this morning, slightly higher, but it is said to be in talks to purchase cloud security company Wiz. That deal will be $33 billion. It's a restart of discussions, if this sounds familiar to you, that were called off last summer after extended negotiations. The deal, which may be announced as soon as today, would be Alphabet's largest acquisition to date. It could help Google catch up with Microsoft and Amazon in what's a very competitive cloud computing market. Let's also show you what BYD is doing this morning. That's the close, jumping 4% in the Hong Kong trade. The Chinese automaker unveiled a lineup of EVs that it says can charge almost as fast as it takes to refuel a regular car. So something like 5 minutes, something that I'm sure your smartphone can't even do. The automaker's new battery and charging system can provide around 249 miles of range in that 5 minutes. It's going to start selling the technology we're going to start selling the vehicles with the new tech next month. Tesla also a little bit weaker this morning, down by about 0.5%. Coming up, we head over to Germany, where lawmakers are set to vote on a major new infrastructure package. Raj Agrawal, head of real assets at KKR, is going to be joining us to discuss investment opportunities, a conversation you do not want to miss. Stay with us. This is Bloomberg.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere. And I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think that all these little girls and boys, I don't want to discriminate, who are now in school-going age, imagine once education, sports, we empower them. What a difference they would make not only to India, but to the planet and the world. And the world needs it now than ever before.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Over to Germany, where lawmakers have begun to debate a crucial plan to release defense spending from debt restrictions and set up a 500 billion euro fund for infrastructure investment. A vote is due to happen around 8:30 a.m. Eastern Time. For more, let's go over to Berlin, where Bloomberg's Oliver Crook is standing by. Oliver, what are we expecting with the vote today?
Danny, we talk about seismic shifts, we talk about paradigm shifts, fairly regularly in news, but this is truly a moment where in Germany you're seeing a shift in really sundering a couple of taboos that have not been broken in many decades. We're talking, one, about the remilitarization of Germany, something that's a very fraught issue in a number of countries, including Germany itself, since the Second World War. And we're talking about doing it basically with pure debt financing. So what the Bundestag is going to vote on today is that 500 billion euro infrastructure fund. 100 billion of that is going to go to sort of climate initiatives. That was part of the concessions that Friedrich Merz needed to make to the Greens to get them on board. But the other sort of big story here is, Danny, the sort of limit on defense spending is unlimited. They could spend as much as they want, basically debt-fueled spending on the sort of defense. And they've also sort of really sort of expanded what it means to spend on defense, so the definition of defense is. So this is really a moment in which the sort of Germans are really sort of opening the fiscal taps. And we should say it, doing it in a very sort of challenging and very strange political move, where you have a man who is not yet Chancellor of Germany, who is going to the former majority of the Bundestag that has legal power, but doesn't really have a mandate, in order to change the Constitution, in order to do something that he ran his entire campaign saying that he would not do. So there will, of course, be some political consequences to this. The question is if basically €1 trillion of spending over the next decade or so will make people sort of move past that and really turn this economy around, which, as we know, has been in the doldrums for a number of years.
Well, because of some of those oddities, Oliver, there had been this discussion as to whether this actually happens. And perhaps not whether it happens, but whether it happens at the extent of spending that Germany has been talking about. What is the political process at this stage? Does it look like we will, in fact, get some of these figures, the hundreds of billions of euros that had been talked about initially?
Yeah, so Danny, let's deal with a couple of different parts of what you point out. So there's first whether or not this is going to get through the Bundestag later today in terms of the votes. Basically, these majority parties have a 31-vote buffer. That means that basically it would take 31 people from the three main parties backing this to sort of either abstain, not be there, or vote against it in order for it to fail. Friedrich Merz feels very confident that he'll be able to get this through. The other question, of course, Danny, is this is a huge sum of money, but how can this money be productively spent? Do we have the projects? Do we have the capacity to basically to fill all of these orders. That is a different question. That, I think, longer term is a much more open one. But I think that, listen, when you look at some of the estimates that we've heard from a number of economists talking about what the impact could be on the economy, we heard it from DIW. We're talking about the infrastructure spend alone, which could be half of this package, could add 2 percentage points of GDP growth every year for the next 10 years. That is absolutely massive. Add defense on top of that, that could take it to another level, particularly at a time when these sort of traditional industries of Germany are really suffering. We think about the auto sector, could basically a lot of that capacity, a lot of that money shift from autos over into defense.
Oliver, thank you so much. That is Bloomberg's Oliver Crook in Berlin. Now let's stay with infrastructure and the opportunity for private asset managers while we're getting the spending coming from Germany. I'm pleased to say that joining us now is Raj Agarwal, head of real assets at KKR. Raj, what a timely conversation. And I know you're also in Berlin at this moment for an infrastructure conference. What is the mood there? How different is it this time around than years past with you and your peers?
Thank you, Danny. Thank you for having me again. I must say it's incredibly different. It's palpable, the optimism in the air coming largely out of this German vote that's happening today and the anticipation of passing this infrastructure bill. Infrastructure has a multiplier effect on the economy, and the scale of what we're talking about here, if you add infrastructure and potentially what happens in defense, even as a percentage of GDP, we're talking larger than the Marshall Plan was, larger than the reunification spend was. And so when you take and then you zero in on a sector like infrastructure and the multiplier effect that has on growth, there's a tremendous optimism on what this could do for the economy. Our CIO and head of global macro, Henry McVeigh, released a piece this morning, Thoughts from the Road, where we've taken up our own GDP forecast, Henry has, for the next couple of years, and that's just the start of it. And so there's a real sense of optimism on the streets here.
Are you confident then that there is a follow-through, Raj? Again, this is such a huge change, as you pointed out, the most spending since reunification in the 1990s. There's concern that Germany will actually follow through with what is promised to get that global growth or that German growth reignited in Europe. How confident are you?
Yeah, I'll leave the politics to you and Oliver. You're better prognosticators there. But what I would say is that there's a big belief, and you can hear it in the conference. You can hear it from some of the regulators and government officials that have been here. There is a true belief that infrastructure is a key to economic growth. And just to give you a couple ideas, right? So the cost of power in Germany, or in Europe broadly, is about 23 cents a kilowatt hour. That compares to U.S. power costs of 8 cents a kilowatt hour. Investment in energy infrastructure, energy transition to make power more efficient, that's critical for competitiveness of European and German industry. And so, again, I don't know about the politics, but the conviction around infrastructure being a source of growth, that's clear and that's compelling. So if that helps, hopefully it gets passed.
Raj, have you been having talks with the German government? Where does KKR fall into all of this?
We're incredibly active on the private investment side. So it's clear that a piece of a $500 billion package will go to what people think of as infrastructure, like toll roads and bridges, and making sure that's fine. I think there'll be a piece of it. We believe that a big part of this is likely to be investing in growth sectors of the new economy, and that's likely to be digital infrastructure, so fiber, data centers, as well as energy transition. And in both those, they've been massive investment themes. We have, as a firm, in the last 10 years, put over $35 billion of equity capital into the energy transition space, including 4 out of our last 5 deals here in Europe, the climate theme. And on the digital infrastructure side, if you combine, just as an example, our data center platforms. We've got 5 data center platforms globally, 2 in Europe and the Middle East, 2 in Asia, 1 global business based in the US. And the 5 of them combined manage some $50 billion of assets with about another $100 billion of advanced pipeline. And so we're active in what I think will be 2 of the key sectors behind the infrastructure program.
So you're ready, but again, Raj, has the German government been reaching out to you or vice versa? Are they having that conversation with you and your peers about the capabilities that you have at your ready?
If we could take just a lesson in history, we think this would be government-helped and private sector driven and assisted. And so, much like the rest of the world, a lot of what we do is private to private collaboration, but some of what we do is also public to private collaboration. So I think we'll have all parties come together at the table. Even prior to this getting passed, all parties are looking for ways. We've been a big investor in German telecommunications, data centers, energy transition, and we hope to be even more active with what Germany's bringing to the table.
Let me say very diplomatically answered, Raj. I appreciate that. You mentioned Henry McVeigh and the team's upgrading of German GDP in his recent notes on the road. But within that too, and this is something we've seen across the board, it's not necessarily unique to KKR. We were just talking with BNP Paribas earlier, who is downgrading their U.S. GDP outlook. But the team, again, your economy team over at KKR has also downgraded the U.S. GDP outlook. While Europe is looking more attractive, is there a diminishing opportunity set in the U.S. if growth is starting to look weaker?
So we are big believers that regardless of the economy, especially when you look at why are we investing in infrastructure and why do our investors give us capital to manage an infrastructure, it's because we're all weather tires. Whether the economy is going great, whether the economy is having a tough time, you can count on infrastructure to protect capital in the worst of times, but also to avail you to interesting equity returns out of growth sectors, like digital and like energy transition. And so that's when you have that perspective, whether there's a slowing economic growth or increasing economic growth, there's interesting opportunity in that mix. And so that's really. We're undeterred. We think there'll be continued investment opportunity in the U.S. It's actually been our largest destination of investment historically, and when we look at our deal pipeline, we don't think that that's changing.
And I know among the themes that you invest in the U.S., one is the digital infrastructure, something that's been a huge theme generally. But Raj, the digital infrastructure is something we won't really understand the full extent of it and perhaps the payoff in 5-10 years' time with technology advancing so rapidly. Is there a real risk that we might get to 10 years and we've overinvested, that there's overcapacity? How do you judge that?
Yeah, so the folks that are, a couple things to say. One is that the people that are closest to this, that are betting their companies on this, the big four hyperscalers, they're undeterred, right? Even post DeepSeek. There was a report released yesterday that forecasted 2025 and 2026 investment by Microsoft, Google, Amazon, Meta, by these four companies into data center capacity. And the projection was that in 2025 and 2026, the projection was greater than at the same time last year prior to DeepSeek. And so those companies that know the most about it, they are undeterred, right? They believe that there's a flywheel effect, that even as you have innovation like DeepSeek, that lowers the cost, perhaps lowers the capacity requirements, it lowers the barrier for utilization as well, and it perhaps increases demand. And so when you put that together, there's a positive flywheel effect that those four companies that are closest to it, they do believe that there'll be ongoing demand 5-10 years out. What I would tell you is that as an infrastructure investor, we're trying to invest without taking that view. So we're trying to invest in a long-term protected way so that if the market finds itself overextended, we are still capital protected, through that cycle.
Raj, I think that's a fantastic note to leave it on. Thank you so much for joining. Enjoy the rest of what I'm sure is a busy agenda for you in Berlin. Raj Agrawal there, head of real asset at KKR. Coming up on the show, U.S.-Russia talks take center stage. On your day ahead, we'll set the agenda up for you. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We'll be talking about land. We'll be talking about power plants. That's up, it's a big question. But I think we have a lot of it already discussed very much by both sides. We're already talking about that. Dividing up certain assets.
President Trump speaking to reporters about the upcoming ceasefire talks with Russia. Speaking of which, let's set you up for your trading day today, because that Trump-Putin call will be happening reportedly at 9 a.m. to discuss ending the war in Ukraine. Plus, we're going to get more economic data with housing starts and building permits. That's at 8:30 a.m. Eastern. Then Jensen Huang gives his keynote speech at an NVIDIA event at 11:30 a.m. Let's now take you live to the Bundestag, where the Chancellor in waiting, Merz, has been speaking about Russia's war on Ukraine, saying that it is also a war on Europe. Merz also saying that Germany is laying the foundation for Europeans' defense push. Again, they will be voting on that defense package today in the first round. All right, that is it for your brief. Surveillance takes it from here.
Grundgesetzes möglich werdenden Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
We've wiped away some of the post-election euphoria. People are tamping that down.
Investors globally have got to take more balance. That probably means lightening up on U.S. exposure and broadening out to the rest of the world.
The administration has greater tolerance for a move lower in the market and even a full slowdown in the economy.
It's going to seem loud. It's going to be a lot in the headline news. But for the long run, we will get through this.
There's this really negative narrative around tariffs. I promise you it'll change as we get into the summer months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday on a two-day winning streak, the biggest two-day rally of the year so far, with the Fed's two-day meeting kicking off in Washington later on this morning. Attention turning to Europe as President Trump is set to hold a call with his Russian counterpart Vladimir Putin, pushing for a 30-day ceasefire, just as German lawmakers are in the process of voting on a bill that could unlock hundreds of billions of debt-fueled spending. That spending, a key pillar of the Europe trade. The latest Bank of America Fund Manager survey capturing the biggest allocation to European stocks since July 2021 and the biggest drop in US equity allocation ever. They're calling that this morning, Lisa, the bull crash.
And right now, there is this question of how far it can continue. And I'm really glad that you brought up this idea of the event risk truly being in Europe this morning. You have the 1-2 punch of both the potential for the Ukraine-Russia war to end, as well as spending to get past the Bundestag, the lower house of German parliament. If they don't get done, do you get a reversal of what we've seen? If they do get done, do you just have a turbocharged move into Europe and away from the United States?
We've been on this story now for a number of months. The actions of the President of the United States pushing the Europeans to do things that might be good for them.
It might be good for them as we see what's going on in Germany and potentially also Europeans talking about things like deregulation. When it comes to, though, this potential of ending a war on European soil, Caroline Leavitt, the president's press secretary yesterday, said we are on the 10th yard line of peace. Coming out of this meeting is going to be incredibly important. The Kremlin says it's going to begin potentially as soon as 9 a.m. this morning. Two things to watch out for. Maybe the two will talk about a summit when they meet in person, and whether or not we could see business ties, maybe some sanctions lifted or other sort of business ties come back into the fore.
Which a few months ago was absolutely unthinkable. Now, you may disagree with the President of the United States on his strategy to get Russia to come to the table and secure some kind of peace agreement in Ukraine. But the euro doesn't have Felix. The euro right now is close to 110, and the euro is close to 110 because of that, not just because of the spending effort in Germany.
This was one of the bull cases for Europe coming into this year, was the potential for the Ukraine-Russia war to end. Now we seem to be getting closer to that, and it's one of the prongs. Mark Rutte, in a conversation with you from NATO, talking about the likelihood of normalization of ties with Russia. Seems like it's a far way off for that in Europe. That said, it really raises the question, are there a lot of things that could go right or not?
He said it's not there yet, but he did say step by step. And if the war were to end and relations were to be normalized, this could be a potential outcome.
That call is set to take place a little bit later on this morning. Once we get headlines from it, we'll share them with you. Equity futures right now on the S&P just a little bit softer. We're down by 0.2%. Coming up this hour, Peter Chi of Academy Securities in the recession camp, Elias Galou of Bank of America on a cautious global fund manager survey, and Kit Jukes of SocGen looking for the big euro rally to continue. We begin this hour with stock steady as the Fed kicks off a two-day meeting. Peter Chi of Academy Securities writing, I don't see the Fed acting in a big enough way to offset the risk that I see. The convergence of so many policies seems to risk a recession before any probability of seeing the benefits. Pete joins us now for more. Pete, good morning.
Makes me sound so bearish.
Got to say, you sound incredibly bearish. Are you saying you're not?
No, I actually am. I think one thing is, even the prior discussion, I think a big part of the change is
we are trading capital flows, for trade benefits, right? So we're going after trade. I think we're seeing capital outflows, and it's been a perfect, mix for taking capital outside of the U.S. All of a sudden, you have yields up in Japan, you have yields up in Germany, so you can actually get some return on that side. And when you look at equity valuations, all these other markets had lower valuations. So I think one of the big problems with our strategy so far has, rather than having people come to the table begging for mercy, it's actually pulled money out of the system. It's made people rethink things, and they're not rethinking things in a way that really involves the U.S. I think people are trying to rethink things away from the U.S., and that's the negative.
That was not the objective. These are unintended consequences. And for the market, the consensus view was that some of these policies would lead to dollar strength. They've led to dollar weakness. That speaks to the capital flow story. Do you see this turning around anytime soon?
Yesterday was the first day we really went the full day without any big tariff headlines. People have seemed to, maybe there is a Trump put. Maybe you realize, hey, bashing on tariffs every single day, bashing our allies is not a good strategy. And you keep looking at it. We've been searching for, where's all this excess capacity? So one, there isn't a ton of excess capacity. So if we just make things more expensive coming in here, that will flow through a little bit. And then you have China. China's the one with excess capacity. Their pricing is so cheap that 20% tariffs that we've added don't really make them uncompetitive. So I think we have to rethink this and do some sort of holistic strategy that has a 1 to sort of 3 year plan. How do we build steel plants in the U.S.? There's so many things that need to be done to make this effective, and we just dumped everything on day one, and it's been a mess.
There's shifts in capital flows that are easier to see than others. One of them is just looking at the euro versus the dollar. One of them is looking at stock allocations shifting to the euro region rather than the U.S. You've raised a point about boycotts or basically withdrawing from American brands overseas. Are we seeing any signs of that other than, say, Tesla, which is somewhat idiosyncratic?
It's hard to tell, but I think you are seeing a little bit of evidence that people are, at the margin, shifting away from American brands. And I think American brands represented so many positive things. And I really think the administration is at risk that there were so many intangible benefits from what the U.S. does, from, the presence that we had, kind of this benevolent superpower. And as that goes away, I think we lose some of the reputation, and that hurts. And unfortunately, too, I think the way we've thrown out all these tariffs, even if you didn't like China, you kind of have to come knocking at China's door and say, hey, maybe we should be doing business.
Is there a risk that people are getting over their skis with all this pessimism? That if you take a look at the actual policies, we haven't seen the more positive sides of things. Not all of the people are in their seats yet in terms of executing these. We haven't been through April 2nd. And if you actually look at growth, it isn't that bad. Even the airlines, which everyone uses the example of a slowdown, are still booking at pretty healthy rates. What's that risk?
So I think the risk is where we're headed. I think the things that DOGE has been doing, so one, we're cutting some spending. That does flow through the economy. I think you're seeing that it's very difficult to get jobs for those people who are getting left behind. But then more importantly to me is there's so much uncertainty, it's putting plans on hold. So, normally you like to do things that pull demand and, hiring forward. If anything, we're pushing it further away, right? There's no one that we talk to really that's saying, well, I have to bring my construction back to the U.S. from, say, Canada or Mexico because I don't know how long these tariffs last. They might only last a month. That would be silly for me, and it's going to take months and months, if not years, to do this. So I think there's a lot of hiring on, freeze. So unless the Fed does something tomorrow, which they might, but I don't think they will, when we see a real change in messaging, I think we resume the sell-off, and I think we're going to head to bear market territory down at least 20%.
Are you saying that the tariff uncertainty can tip the U.S. into recession, just that alone?
I think that combination of the spending cuts that we're doing, the firing in that sector, it was already, I think, I look at the quits rate, right? The job market wasn't that great. I think the official data tends to get overstated in January, February, because they're still miscalculating a bunch of the seasonals. So if we tip over into weak employment, people on hold, no one quite understanding the cost of goods, which I think will go up to some degree. Yeah, I think we tip into recession far faster than people think, and maybe we're already at that sort of stage.
We're at an inflection point this morning. You have a bunch of generals you consult with at the firm. What do they make going into this phone call between Trump and Putin?
So one, I'll take a step back. I think one thing they were all very positive on was the actions in the Middle East to clear up shipping. I think that's the right sort of thing. It puts pressure. I think we've argued under the Biden administration that we lost deterrence as a tool, and to get deterrence, you actually have to be aggressive periodically. You have to put some fear. So that I think we were very positive on. I think we're all trying to figure out what exactly the end game is with Russia and Ukraine. I think there's an opportunity maybe for the president to come out looking good. I think if Putin offers a really bad deal and the president accepts it, again, I think that will cause this further divide where you see more of this. Any sort of peace deal, though, we really think was always going to benefit Germany and Poland. Poland is going to continue to be the big winner in this whole, realignment of Europe. So continue to be positive there for stocks. Whether or not there is a deal right now, we're headed that direction. And I think a bad deal, though, would really push people away from the U.S. again, unfortunately.
Hold up, Pete. You see a situation where U.S. equities could be in a bear market, down 20%, and German equities could stay this high, up 20%.
Yeah, I think, one, you look at valuations, they're still somewhat cheap. People are pulling their money back to their own home base. They are doing spending. They're doing things that are going to be clearly constructive for their businesses. I think they do have some excess capacity, right? VW is trying to figure out, no one wants to buy a VW EV, supposedly. What do we do with that? Okay, can we make military equipment? And I think that's going to be interesting. And normally that sort of spending would fall heavily into the U.S., right? Germany would be spending a lot of their money on U.S. equipment, U.S. things. They feel very reluctant to do that, given the current tone. That could change, but so long as that's going, yeah, we're getting the separation. You get those valuations picking up there.
Does the groupthink not concern you over in Europe right now? That overwhelmingly there is a huge consensus celebrating Germany rearming. Does that not concern you?
In which way? I don't think it's a bad thing for people to have their own ability to defend themselves. What I do think, though, is Trump's been pushing for this, 2.5%, 3%, whatever spending required he wants. But I think that was all done in the way that, well, we're still going to be the big person in NATO. We'll still tell NATO what to do. And I think this spending is now, okay, we're actually going to spend this, but maybe we don't need the same U.S.
I just want to approach this logically, because at the one point earlier this year, we were confident that for European equities, it was a good story if the United States pushed for a quick peace agreement. Part of that story's happened. But Germany rearming, Europe spending on defense, doesn't scream they're pushing for a quick peace deal. That tells me they're pushing for something very different to what President Trump is pushing for.
Well, I think this all comes down to what sort of deal is put in place, right? I think the fear is that if, and I'm probably on the European side, I think most of our generals would be that if you do not put some sort of protection in place, this is just a temporary rearming for Putin to go back in and take a bigger bite. And I think that's the big disconnect right now is, I think when we were looking at this and we figured we'd get some sort of peace, we did not think it would be easy. We do believe that Ukraine's going to have to give up some land. We do think that they will get a lot of money from this. The whole key is like, whether it's a security agreement, how do you stop Russia from just rearming and coming back in? And that's, I think, what Europe's preparing for.
Is German rearmament basically Europe trying to set deterrents with Russia?
Yes, I think that's
Even if they're willing to have gas deals once again?
They will try and do both. I think also, again, it's like this going to be this mad panic where everyone's trying to rearm themselves.
Something about it, Pete, doesn't add up. Something about it doesn't add up.
Well, none of this is added up when we look at what the U.S. was doing with Iran, right? We were allowing Iranian oil to go through. Russia continues to sell your oil into and natural gas into Europe, right? Everyone is so scared about energy, and that's the crazy thing, right? If you went back 5 years ago, everyone was about green energy, green energy, green energy, and even the U.S., everyone energy self-sufficient. We realize all it takes is one oil price shock to realize we are not that energy and self-sufficient. Inflation's scary. So I do think, I love the energy market. Again, my strategy for the U.S., where I do like the U.S., is I'm continuing to invest in anything that national production and for national security's sake. So anything that has a security element, I do think we are going to see more and more production of that. I think things like chips are very important, medical equipment, those things are actually going to be really part of what gets driven by this. You'll see some growth. That's where I'm headed. I'd like to see more done, though, by actual legislation. The executive order thing, I think, is not going to work particularly well. If it takes 4 or 5 years to build a plant, no one's sitting there saying, based on some executive orders that may be turned over in 4 years or may be turned over in 2 months, I'm not investing.
Pete, it's good to see you. Bearish, very bearish, US equities. Peter Chair there of Academy Securities. I'm saying that for Pete, but Pete basically said it too. Looking potentially for a bear market in US equities at a time where European equities might be as high as 20%.
Yeah,
up 20% by the end of the year.
Talking about the flows really reversing, and the only thing that could really stave that off would be more policy certainty from one or the other, either the Fed cutting rates this week or potentially for the White House to back away from some of the plans.
Equity futures a little bit softer this morning on the S&P 500 with an update on stories elsewhere. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. President Trump, is set to speak with Russian President Vladimir Putin today. Interfax reporting that the call will kick off at 9 a.m. Eastern. The U.S. is pressing for Russia to agree to a 30-day ceasefire with Ukraine. Trump has hinted that the U.S. and Russia are already discussing how to divide assets in Ukraine. Elsewhere, Israel launched a wave of airstrikes across the Gaza Strip today in response to what Prime Minister Benjamin Netanyahu says is Hamas's refusal to release Israeli hostages. Gaza health officials say at least 44 Palestinians have been killed. The move ends a nearly 2-month ceasefire that had paused 15 months of fighting. A proposed tie-up between Capital One and Discover Financial Services may be in jeopardy. The DOJ has expressed concern about the $35 billion merger, saying it would harm competition, but did not make a final decision. That merger is awaiting approval from the Federal Reserve and the Office of the Comptroller of the Currency. And that's your brief. John.
Danny, thank you. I remember the days not so long ago when we all thought it would be easy to make deals happen.
I had the same reaction when I saw this story. I was thinking, really, a financial deal that could get stymied because of concerns about the subprime lending market? Think about tables turned in terms of expectations.
Not what we expected, put it that way. Up next on the program, all options on the table.
The president would tell you that all options are always on the table. April 2nd day is a big day for the country, as the president has said. Reciprocal tariffs will go into effect.
That conversation up next with Ed Mills of Raymond James, live from New York City this morning. Good morning.
Has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back. And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equity futures on the S&P 500 just a little bit softer here. We're down by 0.4% on the S&P. Some breaking news just moments ago. Later on this morning, there will be a call between the 2 leaders of Russia and the United States, President Trump and President Putin. This coming from our team here at Bloomberg, that Putin is said to want all arms to Ukraine, demanding a suspension of all weapons deliveries to Ukraine during a ceasefire proposed by Donald Trump later on this morning.
Not surprised by this headline. Putin is certainly going to come into this negotiation with really high demands in order to get to that 30-day cessation of fighting. One of them seems to be he wants all arms to Ukraine halted. Basically, the U.S. has been the ones backstopping and arming this country. And for, I think, Putin to get to a yes on a 30-day ceasefire, he's not going to want to see that military equipment come into the country. This is going to be incredibly difficult for Zelensky to sign off on, as well as European allies.
Plenty of coverage on this story throughout this morning for you. We'll hit that a little bit later. Under surveillance this morning, all options on the table.
The president would tell you that all options are always on the table, and he's always ready to respond if he feels the United States is being unfairly treated by our allies and also our competitors around the world. But yes, the April 2nd day is a big day for the country, as the president has said. Reciprocal tariffs will go into effect.
So here's the latest this morning. US Trade Representative Jamieson Greer pushing for order after months of confusion over tariffs. Sources telling us here at Bloomberg that Greer is looking to take control of President Trump's upcoming tariff announcement on April 2nd. Tyler Kendall joins us now for more. Tyler, good morning. What's the latest on this front? What's behind this big push?
Yeah, John, good morning. Well, it appears the USTR has already started to implement some changes, including reestablishing a formal process for businesses and stakeholders alike to provide feedback. That's something that's considered to be traditionally done, but we've yet to see in this tariff rollout so far. Sources familiar do tell Bloomberg News that those requests will be taken into account ahead of April 2nd, and that could be critical, as that same report indicates that President Trump could ramp up or tone down tariffs depending on how he feels countries have been either cooperative or combative ahead of next month. And it comes as senior administration officials keep pointing us to the fact that we have seen some of our more unbalanced trading partners bring down those tariff barriers. But we've yet to hear if there's going to be any exemptions or carve-outs. We did get fresh reaction this morning from at least one trading partner, Australia's treasurer, saying that these U.S. tariffs so far have been, quote, self-defeating after the country failed to secure any exemption last week for those 25% steel and aluminum tariffs. John, just quickly, later on in that press briefing, the White House press secretary said that investors should be confident because they are taking the same first-term formula, as she called it. But she failed to mention the uncertainty that we have been seeing, as well as that it appears out of order, that we have yet to get that firmer fiscal agenda footing that we saw last time around.
Tyler Kendall down in Washington. Tyler, appreciate it. With us around the table to extend the conversation, Ed Mills of Raymond James. Ed, good morning.
Morning.
Good to see you. Let's talk about the April 2nd date. Conversation we've had around this table a few times now is how misleading that date might be. What actually happens on April 2nd? How long before these tariffs would actually hit?
In some ways, nobody knows. But what I'm expecting at Raymond James is that we will get some announcements that are immediate, but we'll also get some announcements that set in place a series of new kind of investigations. And what you hear with Jamieson Greer trying to take control of this is there's a real concern within the Trump administration on some staff that if you were to try to do all of this on April 2nd and use emergency powers, there's huge legal risk and it's going to get struck down. And so what can you do on April 2nd that goes into effect immediately, that can be upheld in the courts? And what can you do that sets in motion maybe a worldwide Section 301 investigation that can be defended in the courts, but ultimately still have a very high tariff rate that goes on basically every single piece of equipment and goods that come into the United States? That's still a very high probability, John.
So Howard Lutnick, the Commerce Secretary, actually outlined that to us as well. You could see some on April 2nd, and then some might be weeks or months down the line. So if they go on April 2nd, they're likely using IEEPA. What could we see them use IEEPA for and say, actually, this will hold up in court because there's national security concerns?
Yeah, so Anne-Marie, I would say there are some IEEPA stuff, and I think that the Mexico-China on IEEPA probably holds up. If there are other national security items, they could say semiconductors, clear things within our supply chains. But I would look back to the first Trump administration. They had a Section 232 investigation on autos. They could kick that in pretty immediately. They've already done some investigations on semiconductors generally under the Biden administration. Use that. There was a investigation into France on digital service taxes. They almost put in place a set of tariffs on France back in 2020 when Trump was in office. They could reactivate that. And there was also an investigation into currency manipulation in Vietnam, which could go into effect immediately. So take things off the shelf you've already done that are legally defensible and put that into effect on April 2nd. Seems like a pretty reasonable expectation.
Ambassador Jamieson Greer is very methodical. He flies under the radar. He's a lawyer. Mark Short had this to say: if you had people in the first Trump White House who fundamentally disagree with trade policy, this time around, they don't disagree with him on trade. They disagree with the implementation. Do you view it like that? Who's potentially holding Trump back from potentially his most aggressive policy proposals on tariffs?
So I think they have a team of rivals again. I think it is team economy versus team tariff. Team economy is Scott Bessent. I think the kind of overall kind of team tariff is Jamieson Greer, is Howard Lutnick, is kind of Peter Navarro pushing for it as much as possible. And on team tariff right now is Donald Trump. And so he alone gets to decide exactly what happens.
There were two dueling articles that I thought were really interesting. New York Times had an article yesterday about how Donald Trump is serious this time around, plans to put these tariffs on, and had a call with some of the auto manufacturers saying, guess what, guys, this is for real. You need to get used to it, 25% tariffs. There was an article by Bloomberg talking about all the people around him saying, hold on a second, we need to understand what the corporate concerns are and actually try to mitigate this with pro-growth policies, et cetera. Do you have a sense of how much this White House, and I mean everybody in the White House, actually does care about markets and what companies are saying?
Yeah, I think they care about markets. They care about the economy. I think what I hear from them is that this is a process, that they have to do the deregulation, get the tax cuts, do the tariffs, break down non-tariff barriers around the globe, and then you get the positive market reaction. What I'm hearing this time in Trump 2.0 is, wait for it, we have to put this all in place. If I get some pushback, is the process right now is too chaotic.
Well, that's what I was going to ask. Is there a process, or is it a concept? Is it concepts of a plan, or is it actually a plan?
I think it's more concepts of a plan, and I think that there is a lot of disagreement. Folks on Team Econ are not okay in the way in which this is being put out, but Team Tariff felt that they went too slow in Trump 1.0. If you go back to Trump 1.0, it was March 2020 before they signed the phase 1 trade deal. We've already, in the first couple of months, done more on tariffs than Trump did in 4 years the first time around. They say their biggest mistake in 1.0 was taking too long. So they almost don't care.
Just want to fit in this final question. Some breaking news about 5 minutes ago. We know this call is going to take place later on this morning at 9 Eastern time. President Putin demanding a suspension of all weapon deliveries to Ukraine during a ceasefire. That could come up on the call. We expect it to later on this morning between the two leaders. What do you think the outcome of all of that's going to be?
I don't think that's a realistic goal of this. However, I do know that Donald Trump likes to have any phone call come with a bold announcement. So I would expect him to talk up the opportunity of a ceasefire. But Putin is doing a good job of trying to reset the goalposts, because Donald Trump always resets the goalposts. And a lot of world leaders know if you can get him one-on-one, he usually agrees to more than what staff would agree to.
Well, that's the question we've got this morning, isn't it? We're going into the phone call. Will we get a one-on-one meeting in person off the back of this?
My reporting of weeks ago was that Trump and the Trump administration wanted a meeting with Putin in Saudi Arabia by the end of February. Well, guess what? We're in March. It's Ramadan. Then there's Eid. Potentially, I would say you could see one, if this phone call goes well, in the next month.
Ed, it's good to see you, as always. Appreciate it. Thank you. Ed Mills there of Raymond James. Equity futures right now on the S&P 500, negative by, let's call it a third of 1%. Up next on the program, Eddie Escalou of Bank of America on the latest fund manager survey, seeing record amounts leaving the United States and heading to guess where? To Europe. That conversation up next.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equity futures on the S&P down here by 1/3% on the S&P 500. A two-day run on the S&P amounting to a gain of about 2.8%, the best two-day pop going back to November of last year, shortly after the US election result. In the equity market beyond the S&P, the Nasdaq 100 down by 1/3%. Tesla still falling in yesterday's session. That stock down by some 18% so far this month. Brutal stuff. In the bond market, 2-year, 10-year, 30-year, what do you do with retail sales yesterday? Just how weak are things? Beneath the surface, some cause for concern.
Yeah, if you look at some of the lack of buying, and particularly autos, negative. When you take a look at the headline number, negative, the comp sales was the one bright spot. The comparable sales actually beat expectations, but downward revisions in the prior month. What you do with this is, it's not bad enough for the Fed to cut rates, but it's not good enough to lose some of the concern around a slowing U.S. economy.
So you mentioned the Federal Reserve. They go into this two-day meeting. If you're on the committee this morning and you start that two-day get-together, are you more focused on downside risk to growth, upside risk to inflation, or both? And it's the or both that's problematic to set policy for this Federal Reserve. In the FX market, things are straightforward for the year so far. You buy Europe, you buy the euro. Euro dollar approaching 110, 109.34, positive 0.1%. An important vote taking place in Germany throughout this morning.
Yeah, you get a vote in the lower house of German parliament to try to see if they can get some of the spending actually enacted in short order. The expectation is they could end up with almost €1 trillion of spending on both infrastructure and defense at the same time that you have another positive impulse coming from the potential end of the Ukraine-Russia war. Try to put it all together. I know that we've all been trying to struggle with it. Markets are rallying in Europe, and that is the direct response.
The euro near the highs of the year. On our radar this morning, US Trade Representative Jameson Greer pushing for order after months of confusion over tariffs. Sources telling us here at Bloomberg that Greer is looking to take control of President Trump's upcoming tariff announcement on April 2nd.
So this makes sense, right? This is the individual who is the trade lawyer who spent so much time working and learning under Ambassador Robert Lighthizer, who was Donald Trump's USTR head in Trump 1.0. We've seen a frenetic nature on how these tariffs are being rolled out. Sometimes it feels like his team isn't even aware of some of the truths that are about to hit our computer screens when it comes to tariffs. So Jameson Greer, according to Jenny Leonard and the team down in Washington, is really trying to become more methodical about this approach. I think a key question is, what actually happens on April 2nd? What do they use using IEEPA? It could be national security concerns. And then what are the other duties that we just have to wait weeks, potentially months? And in that time frame, how much market disruption could there be? Because Donald Trump will be negotiating.
You know, it's interesting. Some of the reporting really raises a more fundamental question, which is the anxiety in markets because of the uncertainty, or is it because of the tariffs themselves? And right now, people have been conflating the two. It's sort of the Trump put has been thought of as removing some of the tariffs. But is a Trump put equal to just creating a more reliable framework that companies could use to plan business? Is that enough of a Trump put to really galvanize some enthusiasm for the U.S.?
say both. I know it doesn't help, but I'll say both. I think the administration's been much more aggressive on some of our biggest trading partners, Mexico, Canada, than some people predicted. Don't think the volatility helps at all. And at this point, the bar is so low that if you just told them it's going to be 10, 15%, give us something to work with, I think people would move on. It's difficult to move on when you don't know what the policy is going to be.
Which is the reason why reporting from Bloomberg is talking about trying to create a more predictable methodology. Larger question, who is actually driving the bus? It is President Trump, and whether he is sort of amenable to that type of structure is still a question mark.
And he's going to set the bar very high. This is an individual that enters negotiations and talks from a very maximalist approach to try to get to where he wants to be in the end.
You know, I followed the Greer story yesterday, and my view, my reaction to that is that's not so much about the policy, it's about the rollout of the policy. Because if you get the rollout wrong, to your point, in early April, you come out, you try and do too much, you get struck down, then you've got even bigger problems. For me, it's less about the policy, whether you agree with it or not. It's about the rollout of the policy. And the rollout over the last few weeks has been all over the place.
All over the place, frenetic, random. Whatever happened to the 200% on European champagne, wine, and cheese that I know, Jonathan, you're stockpiling? Whatever happened to that? Are we going to see that or not? So there has been almost spaghetti thrown at the wall when it comes to these tariff pronouncements, but there hasn't been a follow-up or even the process of how he would go about this. So I think that's why April 2nd is going to be very important, and probably why Jamieson Greer is dying to get his hands on it.
Stockpiling cheese can be problematic. We'll put it that way, all right? President Donald Trump expected to speak with Russian President Vladimir Putin later this morning. Putin is said to want all arms to Ukraine halted in a Trump truce. That call about 2 hours, 30 minutes away.
I'm not surprised by this headline and the reporting from Bloomberg, because what a source has said to me, Putin is going to go into this meeting saying he wants the land he currently occupies. Russia currently occupies 20% of Ukraine. Putin also has to prove domestically he's obtained the region most important to Russia, given the lives Putin has lost. He wants no NATO membership of Ukraine, which Donald Trump has basically said that's not happening anyway, and he wants sanctions lifted. This is an incredibly high bar, not just for this White House, but even more so for Kyiv and European allies.
We'll have more coverage of this in just a moment. Kit Juicer, SocGen, will join us in about 15 minutes' time. Euro-dollar target for him, 113. We're just south of 110 at the moment. Wanted to squeeze this story in. What a development. BYD shares jumping to a record after the Chinese automaker unveiled a lineup of EVs capable of ultra-fast charging. The company's saying the vehicles can charge in 5 minutes. That's almost as fast as it takes to fuel a regular car. That could be a massive game changer.
And turbocharged BYD is the leading manufacturer of electric cars in the world. This goes to something Peter Shearer's talked about. China used to compete on value. It used to compete on just lowering the price. Now it's competing technologically. It's trying to say this is actually the better product that can charge faster, get more range, and be cheaper. That is going to be a difficult mix to counter with just tariffs or even just putting the walls up, especially for a place like Europe.
It's not just a cheap imitation anymore. We've seen some real developments come out of that country in the last 2 months or so. Tesla, by the way, down again this morning in the pre-market. It's negative by 1.6%. Let's turn to the Bank of America Fund Manager Survey. It came out a little bit early this morning, pointing to the erosion of U.S. exceptionalism, U.S. equity allocation falling the most in the survey's history, with the investor push into Eurozone stocks hitting the highest level since July of 2021. Joining us now to discuss, Elias Galou of Bank of America. Elias, welcome back to the program, sir. I think it's good to sort of set the stage here and compare this release to the previous survey. What's changed in between the two?
Morning, John. It's great to be back. Look, I think what's really important in this survey is to understand that it was a survey for the record with some epic rotation in asset classes. Look, just to take a step back, the Global Fund Manager Survey has been around for pretty much 25 years, and it is so valuable because it offers clients with data on sentiment and positioning from institutional investors. And in March 2025, we saw the second largest rise in global macro pessimism in the past 31 years. For some institutional investors, March 2025 has felt pretty much like August 2007, August 2011, or even March 2020. The big difference, to answer your question, your institutional investors was a raging bull coming into 2025 with record exposure to the US. The bull has crashed, and your institutional investors is now ending the first quarter as a bear.
One feature of the last month survey that you put out was this massive drop in the cash level. And the equity market, I think, topped 24 hours later, all-time highs on the S&P 500. Elias, what's happened to the cash level this time around?
Look, the cash level is one of the three big metrics that we look at when we analyze the fund manager survey. And as you said, it dropped below 4%, which is the key technical level that we look at when we say probably the market is poised for a top or a sell-off or a correction. And it remained pretty much below 4% since December. Now, the cash level has risen back above 4%, but also what's important is the speed of the increase in cash level from 3.5% last month, which, by the way, was a 15-year low, to 4.1% this month. And this kind of rise in magnitude of the cash level is typically associated with the end of a stock market correction. So that's a very bullish, important development.
Yeah, you pointed out the last time that we saw this speed of an increase in cash allocation was December of 2021. Does that make you think that maybe some of the rotation that we've seen, the flows of capital, have gotten kind of extreme in their magnitude of shifting into Europe away from the United States and toward cash?
Look, I think it's a very important point that you just mentioned, flows, all right? I mean, when you look at the fund manager survey, you see data on sentiment and positioning, what investors would like to do. However, you always need to compare the fund manager survey data with the flows data. On one side, we see a fund manager survey with epic rotation out of the US, in fact, the fastest rotation out of the US on record. At the same time, a big rotation into Europe. So in this sense, investors are buying Europe and selling the US. Now, what does the flow say? When you look at US flows, for every $100 of inflow into US equity funds since the US election, there's been less than $1 of outflow in the past few weeks. In fact, the outflow was recorded last week when it comes to US equities. Now, when it comes to Europe, what we saw in Europe is the big inflows in the past 5 weeks, the largest pretty much in the past 10 years. And that's why investors are saying they are not really selling the US, but they are definitely buying Europe.
Which raises the question of how much of a contrarian call this is. And Elias, one thing that you've been really smart on is talking about how sentiment surveys can be contrarian indicators and sell signals or buy signals counter to what people are doing. You indicated that we saw the 7th largest rise in global macro pessimism in the past at least 31 years. Does that indicate to you this is overplayed? Or does that indicate to you that flows are going to follow, right? I mean, there are two counterpoints at a time of incredible uncertainty, but this hinting suspicion that maybe people have gotten overly pessimistic about the policy mix in the U.S. and perhaps a little optimistic about what's transpiring in Europe.
Sure, absolutely. Look, I mean, the old adage says flows follow returns. And so far, what we see is that flows have not really followed the price action in the U.S. because there's been almost zero outflow from U.S. equity funds. However, what we see at the same time is extreme speed of bearishness when it comes to the U.S. This is very US-driven. If you look at the fund manager survey, the big silver lining is the international developments. Investors are the most bullish they've been on Europe pretty much in the past years. Allocation when it comes to European equities is the highest since 2021. And even the UK now records a positive overweight when it comes to equity allocation. But you're right. If you're a contrarian investor today, and this is the value added of the fund manager survey, it's the contrarian trade that it offers, you would pivot back in favor of US equities, and in particular, you would buy the tech sector and the Magnificent Seven in the case there is a rally. And for a big rally to happen, you also need an easing of the trade war fear and the inflation fear.
Well, favoring or echoing the ECB's Digendos yesterday, this line stood out for me. The last time participants were this worried about one single development, it was 5 years ago when their main concern was COVID. Are investors concerned about the uncertainty of tariff policy out of the United States? Or are they concerned about the actual tariffs?
I think both, right? I mean, you know, John just mentioned before our conversation, it's the rollout, how the rollout of the policy is important. And if you look today at the US administration's rollout in terms of the big policy pillars, you see on the one hand, tariffs, which is fueling business uncertainty, and the consequence of this is a pullback in investment. Just look at the NFIB survey last week that shows that business uncertainty for small cap is the highest almost it's ever been. And on the one hand, it's the impact on the labor market from the Department of Government Efficiency. And these policy developments, they mean that US exceptionalism, which has been significantly driven by how exceptional government spending has been in the past 5 years, has probably peaked.
Elias, appreciate your view. Fantastic survey once again. Great read. Very, very provocative on a morning like this morning. Elias Kalou there of Bank of America. Sentiment has soured so much, and then you look at the moves. If you just knew where sentiment was and where it has been, you'd think equities were down 20%. High yield spreads have blown out by some 200 basis points, and that's not what's happened. Not that kind of damage at all.
Not at all. I mean, we're down a little bit more than 7% from the all-time highs. That's the kind of correction that we're in for the S&P 500. But what Elias Kalou said was really important. If you were going to be contrarian, you'd go into U.S. tech, because that has been a much more significant downturn, and that has been the barometer of U.S. flows and U.S. exceptionalism for the past 3 years.
Fantastic report from the team over at Bank of America once again this morning. Let's give you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Trump says that Chinese President Xi Jinping will visit Washington in the not-too-distant future. Discussions between the two countries on trade and other issues are said to be stuck at lower levels. Both sides are deadlocked on how to proceed. Trump has said that he is open to reaching a new trade deal with China, even as he intensifies pressure. Elsewhere, Alphabet is said to have restarted talks to buy cloud security company Wiz for $33 billion. The deal could be announced as early as today, and it would be Alphabet's biggest acquisition to date. Wiz would boost Google Cloud cybersecurity offering, helping it compete against Amazon and Microsoft. The Hong Kong billionaire, sometimes referred to as Asia's Warren Buffett, has died at the age of 97. Li Shaoqi founded Henderson Land Development in 1973 and built it into one of the city's largest developers. His $23 billion fortune ranked third in Hong Kong. A statement says Li passed away peacefully on Monday, surrounded by family. And that's your brief, John.
Danny, thank you. Thanks for that. More from Danny in about 30 minutes' time. Up next on the program, a defense spending boom.
But we are also now facing new two-sided shocks, mainly linked to trade and defense, trade fragmentation, and higher defense spending in a capacity-constrained sector could, in principle, push inflation up.
In just a moment, we'll catch up with Ollie Crook out of Germany on the vote that's set to take place in Germany this morning. From New York City this morning, good morning.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
S&P carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equities a little bit softer here. We're down 0.25% on the S&P 500. The bond market pretty stable going into day one of a two-day meeting for the Federal Reserve. Yields just about unchanged. Your 10-year 4.30.42. Under surveillance this morning, a defense spending boom.
But we are also now facing new two-sided shocks, mainly linked to trade and defense, trade fragmentation, and higher defense spending in a capacity-constrained sector could, in principle, push inflation up. But looking ahead, shocks might feed into inflation more directly and increase volatility.
So here's the latest this morning. European markets optimistic on the Eurozone's growth ahead of German lawmakers voting on a landmark defence and infrastructure spending bill later on today. According to Bloomberg Economics, the spending increase could boost German near-term GDP by 1 full percentage point. Bloomberg's Ollie Crook joins us now for more. Ollie, welcome to the programme. Just share with us, help us get familiar with the process that starts this morning.
Yeah, so Jonathan, right now the session has begun. So you have German lawmakers right now sort of debating this piece of legislation that is going through the parliament. We expect that vote in about 3 or 4 hours' time. And what we're anticipating is that they will, in fact, pass this sort of piece of legislation, which we should just take a moment to acknowledge how seismic this actually is, how much of a paradigm shift this is for Germany. We are talking about basically blowing to pieces two orthodoxies of Germany from the last few decades. One, a massive effort to remilitarize the entire economy, the entire nation, something that is obviously very fraught in the context of German political history, but also on the other hand, doing it basically purely by debt financing. We're talking about a 500 billion euro infrastructure fund. That is something that is not going to be subject to the debt brake anymore. That is going to be purely debt fueled. And then the other thing, defense spending. There is no limit. There is no cap on how much Germany can now borrow in order to basically boost its defense spending. There's also been another part of this, John, that they've also really massively expanded what is considered security and defense spending. So all of this culminates today. We're expecting this vote to pass. It will go to the upper house on Friday and should be signed into law by the president of Germany on Friday afternoon.
Ollie, any resistance to it whatsoever in Germany?
Yeah, so Jonathan, it's a very interesting question. There is actually some resistance to it. There have been a number of court cases filed by more of the sort of less mainstream parties, the FDP, the sort of libertarian party, the AFD, the far right, the far left. They've all sort of put stuff before the courts. Much of that has been batted away. But John, we should just take a moment to just observe and appreciate the politics of what's going on here. You have somebody who is not even Chancellor of Germany using a basically legally strong but basically politically no longer valid mandate in order to push through a constitutional reform in Germany on something that he spent 4 months campaigning saying that he wouldn't do in order to open up the fiscal space for himself, which he denied the last government. This is something that is, of course, very sort of controversial politically. Whether or not that will sort of stick with the Germans, I think will come down to a large part about whether basically almost €1 trillion of spending is going to be enough to basically make people forget about the politics of this because it turns the economy around. But this could cause even bigger problems and blow sort of even more fragmentation into what is a very sort of fragmented political landscape here in Germany.
Yeah, I was just going to say, it's not controversial when you take a look at markets, and they're rallying on this pretty dramatically. You're seeing the euro gain versus the dollar. You've seen German stocks reach record highs. How much is this potentially going to create a lot of fissures that are going to be politically difficult and delay some of the deployment of these funds that people are creating so much optimism around?
Yeah, so listen, I think the big question, and you point this out, is the pragmatics of this. How do you deploy this money? Where is this money going to be spent? How much capacity is there in this economy to absorb that, right? There is not the sort of capacity to do the military hardware at this point. That needs to be built out. How inflationary could this be? I mean, we have different estimates from different economists. We heard from the DIW, one of the sort of big research institutions here in Germany. They're saying that this could basically add 2 percentage points to the German growth figure annually for the next 10 years. And that's just the infrastructure fund. That is to say nothing of the defense fund. I mean, I was just speaking with the head of KKR's investment research, who happens to be in Berlin, and their head of infrastructure. They're saying that basically they see this as a massive opportunity. They're seeing and feeling the kind of euphoria in Europe that they haven't felt in many, many years. And they see it sort of coming out across the energy sector, digital infrastructure, all of these sorts of things. So I think for one of the first times in a long time, a lot of these sort of deal makers are really looking to Europe for something, for a place that they can actually grow after what has been a very sort of, we should say, sort of limping growth picture for the Europeans.
Oliver, I spoke to Mark Rutte last week, the NATO Secretary General, and he really was welcoming what was going on in Germany, especially as the Trump administration is pushing for NATO members to spend more. Their goal is 5% of GDP. Are you seeing that Trump effect as the reason why we see Germany rearming?
Undeniably. I mean, I think that whether people have been talking about it for a very long time, I think the reality of what a Trump presidency means and the reality of what his policy proposals are have really brought basically this issue to the fore across Europe. And it's not just Germany. The difference is that Germany has the fiscal space to move in a massive way on this, a very big way. You can't just go to Italy, you can't just go to France and say, hey, listen, we're just going to tack another percentage of GDP of our GDP to defense spending. That's just not an option that most of these countries have. The Germans do. And when you look at the impact that it's had on the market, it's much bigger than any of the EU-wide initiatives that they've been talking about. I mean, I think the only thing that could arguably be bigger is the question of joint debt at the EU level, and we're still some distance away from that. This has been an absolutely huge boon. I mean, this is going to potentially also raise European growth across the board over the next couple of years by potentially 0.5 percentage point. So this is going to benefit, yes, Germany, but potentially Europe more broadly.
It's a massive regime shift. Ollie, just before you go, plenty of discussion on the program this morning about a conversation between the Russian and US presidents later on this morning. Ollie, how's Europe responding to that? A phone call between Putin and Trump?
I mean, listen, we get comments from European officials, but at the end of the day, Jonathan, unfortunately for them, they're not really even a part of this conversation. So they're just sort of watching and hanging back and seeing basically how this develops. What we need to watch very closely to get out of this conversation with Donald Trump and Vladimir Putin, because the one thing we really don't know about Trump's position is how many of these sort of red line demands, which are very aggressive by Putin, the U.S. administration is basically willing to entertain. That is something that is a huge question mark for the Europeans, and I think everybody is watching very, very closely.
Ollie, appreciate the update. Great work as always. Ollie Crook out of Berlin this morning. Later on this morning, President Trump, President Putin holding a phone call.
And there's a lot of trepidation right now in Europe, to Oliver's point, but Europe's not at the table, and that's kind of the problem. They're knocking on the door, and Trump's not really allowing them in. He wants this to be bilateral between the United States and Ukraine, the United States and Russia, to bring these two individuals together. But Putin, according to our reporting, is coming in with some heavy demands.
9 o'clock Eastern time?
Potentially, that's as early as it could start. Anywhere between 9 and 11 Eastern, it could start.
That's a few hours away. Equity futures on the S&P down about 0.25%. Up next on the program, Tom Becker of BlackRock, Andrew Bishop of Signum Global, Anisha Sherman of Bernstein, and Greg Tuorto of Goldman Sachs from New York City. The second hour of Bloomberg Surveillance. Up next.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit. Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past
to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The underlying story is still weaker. You clearly see weakness in soft measures of economic activity.
We'll need to start to see more hard data roll over before we get a little bit more concerned.
At worst, the Fed stays on hold for a while, but if something does materialize that's much worse and the Fed does have to ease, they'll provide protection in a portfolio.
The Fed is right now no probability that they will cut in the next month or two.
You need time to process what is effectively a meaningful dose of uncertainty that's been injected in the economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 negative by 0.2%, just a little small softer pullback on the S&P following two big days of gains, up over the last 2 days by close to 3%. On the Nasdaq 100 down by 1/3% over the next 24 hours. One big event gripping global markets, a 2-day FOMC meeting begins later on this morning, concludes tomorrow.
There's a question of how much the Fed is willing to be the relief valve for a market that is looking for one, that wants to see a put come in somewhere, whether it's from the Fed or the Trump administration. Will they emphasize the slowing growth profile of the United States over inflationary concerns? And if they don't, what does that do with the ongoing trend of bonds not acting as a buffer to the equity sell-off?
We talked about this in a previous hour. Are they gripped by downside risk to growth or upside risk to inflation, or both? And it's the both that puts this Federal Reserve in a sticky position. Why? Because they're focused on policy coming from the other side of Washington, and that policy can change from day to day, minute to minute.
Especially when it comes to inflation, even though it's a one-time price hike, as the administration will talk about it, it still could be inflationary when it comes to things like tariffs. And how do you decide on Fed policy when you're unsure of what the tariff level or the tariffs on which trading partners are going to be? So for the Fed, they might have actually an easy excuse today saying, we can't comment because we need April 2nd to happen first.
The data has soured. The sentiment data, the survey data has soured. We got retail sales in the last 24 hours. Beneath the surface, away from headline, we talked about this briefly before, there was some cause for concern out there.
Especially because last month, the prior month, was downgraded in terms of the revisions downward. You get the sense that maybe there has been some froth taken out of consumer spending. Some people will say it is just payback for really robust spending at the end of last year. Some people say that even the auto figure looks like maybe it's a little too pessimistic and people bought a little bit more. These are all subject to revisions. That said, it's just bad enough to continue with the concerns about a weakening consumer, and they're not bad enough for the Federal Reserve to come in and rescue the market.
Which is why people have soured on U.S. equities, captured by the Bank of America Fund Manager Survey, capturing everything we already know. Incredible bullish sentiment on the European continent, and we haven't seen that for a long, long time.
And it is fueled by the sort of 1-2 punch that we get today. I mean, really, if you talk about event risk and a historic event risk, it is today, and it is in Europe, with the idea of a call between President Trump and Vladimir Putin with potentially coming to some resolution of the Ukraine-Russia war at the same time that there's a vote about what fiscal spending, which is sort of anathema to the culture of Germany, but guess what? It is happening in Germany.
And one has informed the other in a big way.
Absolutely. When it comes to Lisa's point, this is an inflection point. We could look back at this phone call being massive in terms of history, because this could be the day that Putin decides he will sign up for the 30-day ceasefire. The issue is he's coming into this call with an incredibly high price. We have reporting that prerequisite for him to sign up on this 30-day ceasefire means no more military equipment coming into Ukraine, especially from the United States. That is going to be something incredibly difficult for Zelensky to swallow, as well as European leaders.
The euro close to 110, 109.36 this morning, positive by 0.1%. New lows for the dollar, new highs for the euro in the last 24 hours, for the year at least, for 2025. This morning, equity futures pulling back by just 0.2% on the S&P. Coming up this hour, Tom Becker of BlackRock, as stocks look to build on a 2-day winning streak. Andrew Bishop of Signum, with President Trump set to speak to President Putin. And Anisha Sermon of Bernstein, with retailers bracing for a consumer slowdown. We begin this hour with stocks steady as the Fed's 2-day meeting begins. Tom Becker of BlackRock writing, inflation data continues to appear inconsistent with achieving 2% on any policy-relevant horizon. We'll be watching tomorrow for how FOMC members incorporate the stagflationary US data revisions into the 2025 rate path. Tom, good morning. It's good to see you. I was thinking of you earlier this morning, went short buns in February, and I just thought you should take the rest of the year off. You made that shift to Europe early for the equity side of things and got away from buns at just the right time. You must be feeling good.
Good time, yeah. I mean, part of it was the European growth data started to inflect in January and February. So some of the U.S. Leading indicators were getting a bit toppy November, December. Europe started to shift a little bit more positively, but then some of our fiscal insights started to turn. And as you know, and as you were just talking about, fiscal's been the driver of markets post-pandemic. And so this fiscal shift in Europe with Merz sort of being the anti-Merkel, Merz kind of taking the Bidenomics playbook of guns, butter, infrastructure, kind of defense spending, and applying that to Europe. The pricing just wasn't set up for that, and positioning really wasn't there, and so you've just seen this huge rotation of positioning kind of undoing Q4s.
And huge unexpected divergence between the performance of European and US equities, where US equities have really lagged. Where are we now? And just going into the Federal Reserve tomorrow, what kind of policy response would you like to see over the next several meetings that might change your mind?
I think they've been pretty clear that they're on hold here. So December, they kind of iced the easing cycle. I think the data they've gotten since, given, even subject to the uncertainty, I think that they think that this is a good level to stay at, given that the labor market appears pretty firm. It's mostly been a sentiment data concern, and the inflation data and the inflation expectations are shifting up. I think it's sort of those expectations. You can dismiss one survey, you can dismiss another survey, but as they all gradually grind higher, I think they do worry about kind of a de-anchoring of their commitment to 2%. And so just staying put would be a shift relative to what's priced in markets now.
I'm laughing because I remember when the Federal Reserve pointed to the University of Michigan sentiment survey and inflation expectations as a reason to make a move one way or another for their policy action. Could we see a similar type of reference at a time where there is no survey like the UMich survey that triggers so many people with such violent emotions? I mean, truly, it's sort of shocking. But do you think that once again, this is in the driver's seat?
I think there's a New York Fed survey where it's started to grind higher. The Michigan survey has a lot of challenges with how they're polling and the partisan kind of nature of it. But overall, if you look at break-evens on a 2-year horizon, if you look at kind of the surveys in aggregate, they're drifting higher. And so that's just in conflict with where they were at the end of last year, saying, we're making steady progress, kind of 2 steps forward, 1 step back. It looks like kind of the direction of travel has changed. And that makes sense with kind of, Anne-Marie, you were saying with the tariffs and just, the sense that prices have to drift a little higher here to accommodate some of these changes.
Which raises the issue of what we're pricing in right now. Are we pricing in the idea that these tariffs or policy uncertainty continues, or both, and that the United States is truly going to lose the exceptionalism, which could be a contrarian buying indicator, or are we pricing in something of just a little bit of turmoil that will pass and that will essentially be met with either a Fed put or a Trump put?
I think exceptional, you could frame it the other way, glass half full, glass half empty. The U.S. exceptionalism is Europe and China now kind of taking the U.S. playbook with fiscal and kind of maybe taking over the leadership mantle. So the U.S. has been the only place where we found economic growth, the only place where we found earnings growth over the last few years. It looks like there are signs now that economic growth is going to be a little bit stronger, a little bit firmer outside the U.S. Earnings growth, too, with kind of these fiscal measures that are going to feed into corporate profits outside the U.S. I think you can frame it that way, which is the global economy is pretty resilient. It's just the U.S. is no longer the only game in town.
So you're saying U.S. exceptionalism, European exceptionalism, Chinese exceptionalism all at the same time?
Yeah, well, I mean, that's kind of what fiscal is, right? So you had kind of a decade of austerity. You've had now kind of the government checkbooks opened up in sequence. And I think that is where bond yields have started to react. In Europe, but we're going to have another fiscal event in the U.S. There's one big, beautiful bill coming, and it looks to be very big. And the reconciliation and kind of what gets chosen to be added is not much talk about what you're going to subtract from it. And so I think kind of the amount of fiscal stimulus that's coming on both sides of the Atlantic is going to be pretty big.
John started off making a point that you nailed the first half of the year. The second half of the year, once we get over tariffs, is going to be all about potentially deregulation and tax cuts. What do you want to do in that scenario?
So I think it comes a little bit to the fiscal multiplier. So it's a very different dynamic to give tax cuts versus direct kind of stimulus and kind of when you have companies want to invest because you're co-investing with the stimulus, kind of what you had with Bidenomics, a little bit similar to what's happening in Germany, where you're saying we're going to be doing the military spending that's going to float through to the companies in those industries. Tax cuts are just not as stimulatory. A lot of it gets saved. And so I think that's part of the dynamic in the U.S., where the concerns about what's the next thrust for the U.S., the consumer's set up pretty well. There are wobbles in the industrial sector, but is this going to be this continuation of the TCJA? It's not really as stimulatory because it's current law, and so there's some sweeteners in there, and there's some additional tax easing, but it's not nearly as big as kind of these big marginal programs.
If everyone's exceptional and everyone is investing in fiscal spending, are bonds remarkably unexceptional around the world right now?
They're not a great long-term return. So when you look at where cash yields are, you look at kind of long-dated yields, and kind of from our perspective, the risks are for higher inflation and higher issuance. Populism tends to lead to higher inflation, higher issuance. We did some work on insurance in California. The dynamics are pretty bad, and that feeds through into the prices of kind of everything that you buy. So the price to insure your property goes up, the price to insure your warehouse goes up. That means that you get markups, you get restaurants marking up their prices, and it's not in the CPI itself, but the cost of kind of insuring kind of an asset base that's gone up 40, 50% since pre-pandemic, the kind of catch-up dynamics of that, we think are just going to keep services prices sticky, and then you add on the tariffs, and then you add on the defense spending, and then you add on tight labor markets. And it seems like markets are priced for kind of, they're still pricing for kind of the secular stagnation, new normal, and we're back in kind of, much more of a 1990s type of economy, which is just higher yields and higher wage growth and slightly higher inflation.
Hey, Tom, you've made some fantastic calls over the last few months. We're all listening to you now. in a much more bigger way. Tom Becker there of BlackRock on the bond market and on equities as well. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Trump has picked Federal Reserve Governor Michelle Bowman to serve as the central bank's vice chair for supervision. Bowman is expected to support a lighter touch on bank regulation than her predecessor, Michael Barr. Bowman has been a sharp critic of plans to require banks to hold more capital. BYD has unveiled a lineup of electric vehicles that it says can charge almost as fast as it takes to refuel a regular car. The new battery and charging system can provide about 249 miles after 5 minutes of charging. BYD plans to sell the cars with the new technology next month. After 9 long months in space, 2 NASA astronauts are finally heading home. Butch Wilmore and Suni Williams departed the International Space Station aboard a SpaceX Dragon capsule at 1:05 a.m. ET, beginning a 17-hour trip to Earth. The astronauts are due to splash down along the Florida coast around 6 o'clock tonight. And that's your brief, John.
Hey, Danny, what a turnaround. What a turnaround for them. Just phenomenal. About time, right? Months.
Can you imagine? I mean, can they even still walk? I'm saying, because don't your muscles have issues?
Oh, they need to do some serious physio.
Yeah,
that's for sure.
They're going to have a medical visit before they go to their families. And their families were like, we were expecting to see you at, 8
months ago.
Yeah, exactly.
Up next on the program, peace talks with President Putin.
We're going to see if we can work a peace agreement, a ceasefire and peace, and I think we'll be able to do it. I'm speaking to President Putin tomorrow morning.
That call set to take place later this morning. Andrew Bishop of Signum joins us next from New York City. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The Treasury Secretary Scott Bessent speaking just moments ago to American media. Some of the headlines for you. On April 2nd, each country will get a tariff number. For some countries, on April 2nd, that tariff might be quite low. 15% of the countries make up a lot of the trade with us, so a lot of those tariffs are going to go on 15% of those countries. All of this is still coming together ahead of that April 2nd date.
It feels like they're out loud talking about the negotiations and some of the work that they're doing to try to, what they would call, have reciprocity when it comes to America and its trading partners. What's interesting here is they won't be automatic, 25% plus 25%, the Treasury Secretary had said. And I think it's interesting that some countries it actually may be low. So maybe for some countries, actually, they don't need to fear so much about what Donald Trump has been talking about.
Nothing to fear on the economy as well. The secretary going on to say that the underlying economy is healthy. There's no reason for there to be a recession, and asking for a guarantee that there won't be a recession is silly. So start asking. Apparently, I think that's the message coming from the Treasury Secretary this morning. Equity futures right now on the S&P 500 is down about 0.2%. In the bond market, yields just about unchanged, 430.62 on a 10-year. Under surveillance this morning, peace talks with President Putin.
It's a bad situation in Russia, and it's a bad situation in Ukraine. What's happening in Ukraine is not good, but we're going to see if we can work a peace agreement, a ceasefire and peace, and I think we'll be able to do it. I'm speaking to President Putin tomorrow morning. We're trying to get a peace agreement done. We want to get a ceasefire and then a peace agreement.
So here's the latest this morning. President Trump speaking with Russian President Vladimir Putin this morning about a ceasefire in Ukraine. Tyler Kendall joins us now from the Washington, D.C., from the nation's capital for more. Tyler, welcome back to the program. Let's just set the stage, just frame for us the stakes of this call, what the ask will be from either side.
Well, John, an incredibly high-stakes call after weeks of intense dialogue, reporting this morning that Putin wants to see all weapons flows to Ukraine halted amid Bloomberg News reporting that he could really slow-roll these negotiations over concerns about Western security assistance, Ukraine's neutrality, and seized territory. Now, for the most part, this White House, as you heard there from President Trump, has remained relatively optimistic, despite Vladimir Putin failing to publicly commit to that 30-day peace plan that the U.S. is backing. I spoke to one foreign policy expert who described this as a tightrope for the Kremlin, considering Moscow does want those strengthening in relations with Washington. We know, for example, that commercial ties are going to be discussed on that call today as Russia really seeks greater access to Western financial markets. Now, the other part of this, which we have been covering at this point for weeks, is the alarm that our European allies are sounding amid these direct talks with Russia that it could pose concerns for Ukraine over accepting potentially a deal seen as unfavorable. Perhaps the biggest question there is the future of security guarantees and whether or not the U.S. will commit to back any. And John, to be sure, Ukraine has agreed to that 30-day ceasefire proposal backed by the U.S. And yesterday, President Zelensky said that he is urging the U.S. to hit Russia with sanctions if they do not also agree in short order. It is something that the White House press secretary did not rule out.
Tyler Kendall from Washington, D.C. Tyler, appreciate it. Let's build on this conversation with Andrew Bishop of Signum Global Advisors. Andrew, welcome to the program. I asked Tyler to sort of frame the call, what the stakes are. Can you frame for us your expectations, what you and the team expect to be the outcome of this call?
I think the expectation is, first of all, that from the Russian perspective, this call is very much about U.S.-Russia relations, bilateral relations. It's not about Ukraine. So that's the first thing, is they're trying to set expectations and try to narrow the conversation to the U.S. relationship with Russia rather than to any sort of ceasefire agreement with Ukraine. Now, in terms of Ukraine itself, I think this is going to be Putin, bouncing the ball back to the Ukrainians by saying, I will indeed agree to a ceasefire if Ukraine fully pulls out of Kursk. It's already left for the most part, but fully. And if President Trump can give me assurances that there will never be European peacekeepers in Ukraine and that I will be able to get most of the 4 regions, including parts of those 4 regions that are currently unoccupied by Russia as of now.
Andrew, on top of that, we have reporting that Russia wants to make sure that the U.S. halts weapons flows before signing up to a 30-day ceasefire. Is that something this administration would agree to?
Yes, I think anything that Russia asks of the administration, it will likely get. And I don't mean that in an exaggerated sense. It's not because we view President Trump as somehow a Kremlin puppet or anything like that. It's just because President Trump wants this conflict solved and he wants it off the agenda. So I think President Trump would be inclined to agree to pretty much anything Russia asks for.
But he wants it solved enough that he would maybe accept a poor deal or lose leverage in the negotiations?
I do think he would. That was not my expectation a month ago, but I think we have to learn from his demonstrated and empirically proven behavior, and I think that is where he's headed. The problem he's going to face, though, is that only applies to what the U.S. can deliver. So what I mean by that is the U.S. can stop sending weapons to Ukraine, but it cannot, or it would be much harder to force the Europeans to stop sending weapons to Ukraine. The U.S. can recognize Crimea, but it can't force Ukraine to recognize that Crimea has been, taken over by Russia, and so on and so forth. And so that actually does put a big limit to what Trump can deliver to Putin.
In early February, the Treasury Secretary Scott Bessent sat with us around this table and talked about how there's a menu to increase pressure on Russia, dial up the sanctions, or draw them back, depending on a negotiation stand. Is that where Treasury is today?
Yes, it is. I mean, that is where Treasury is today in the sense that all options are on the table. But to be very clear, I think this administration might be willing to tighten sanctions on Russia, but it will not to impose the type of sanctions on Russia that would be required to get Russia to cave, right? So it's a zero-sum game. In order to really get Russia to cave, you need to put major sanctions on the country, and that's not something this administration will be willing to do, I don't believe.
Andrew, what is the potential risk for the United States if the U.S. agrees to something with Vladimir Putin that really increases the fissure between the U.S. and Europe?
So as long as it stays at the level of the U.S. doing things that previously were considered, morally reprehensible or unbelievable, incredible, like recognizing Crimea as being Russian, as long as it's at that level, I think those expectations are baked in as of now. Where it would get really problematic is if the U.S. starts doing things like using ITAR and export control restrictions to prevent Europe from supporting Ukraine itself. Right? Because at that stage, that would fundamentally undermine the U.S.'s not just credibility of security guarantees and diplomacy, but specifically of military procurement or provisions by American companies to the Europeans. That would be a huge issue. And that's something I think Trump won't do.
There's something that John has raised, and I think it's a really good question, which is what is the signal that Vladimir Putin is taking from the fact that Germany is expanding its military budget and there's a rearming of Europe to try to defend against Russia at the same time that the U.S. is trying to negotiate a deal between Ukraine and Russia?
So I think that he welcomes, because it's actually giving him, because on the one hand, the rearmament, although real and, although it has some legs, is no threat to Russia anytime soon, right? So he's not sort of shaking in his boots. And at the same time, this rearmament by the Europeans is giving him an amazing talking point, which is the reason the Europeans are standing up for Ukraine is not because they want a fair peace, it's because they don't want peace. And that is an absolutely amazing talking point for the Kremlin.
Andrew, just finally, just a quick question. The amount of LNG, the amount of Russian energy that the Europeans are still buying, what are those levels at the moment? Because I find it to be the most contradictory point of this whole war and the effort of the European capitals over the last several years. Just how much European energy, how much Russian energy are the Europeans still buying?
It is indeed entirely schizophrenic and contradictory. And as you've said, not only are those levels high, but they've actually increased over time. So yes, it is Europe shooting itself in the foot. The one thing I will say is we think that even if there is to be a peace deal, which is not our expectation, it will not involve a return of piped Russian gas anytime soon. So from that perspective, I think the Europeans have turned a corner to some extent.
It's quite a corner to turn. There's one big one left to take, and they haven't taken it. Andrew, appreciate it. Andrew Bishop there of Signum Global Advisors. It's shocking to see the numbers, isn't it?
Rystad Energy came out in early this year, talking about the fact that Europe actually for 2024 bought a record amount of liquefied natural gas from Russia. At the same time, they're sending aid to Ukraine, and then also pointing the finger at the U.S. administration for wanting to get on the phone with President Putin and bring an end to this fighting. So the problem with the Europeans is they kind of talk out of both sides of their mouth.
And then spending all this money to increase your defense capabilities against the country that you're funding right now. It's bizarre.
Andrew's point on that was fascinating. He said it's a fantastic talking point for Vladimir Putin to say, look, they want to keep fighting. They want to bring down Russia. So, they're not necessarily going to have a seat at the table. Whether that is going to be what actually gets the negotiations going, we'll see.
The fact of the matter is the West, whether it's the United States or Europe, were never willing to take the steps because it would hurt their own economies. That would bring the end to this war, which is Putin having no funds to fight it.
Equities right now, negative by 0.2%. That call set to take place later on this morning. Up next on the program, Anisha Sherman of Bernstein as retailers brace for a consumer slowdown. From New York, this is Bloomberg.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
This is a great post by Hugh Van Steenis this morning out on X. There was a 44% increase in attendance by U.S. investors at Morgan Stanley's European Financials Conference today. The interest has shifted pretty quickly, hasn't it?
People are looking for opportunities. We heard that from KKR this morning about potentially investing in infrastructure, but European financials have been the unexpected bright spot. What have they always been, the death trade for everybody? Well, no longer. And the fact that U.S. investors are saying, you know, all right, whatever, policy difference, whatever, let's go for it.
Massive turnaround in the first few months of 2025. Equity futures right now on the S&P 500, just a little bit softer. We're down by a third of 1% on the S&P. On the Nasdaq, we're down by 0.4%. We're 2 hours away until the cash open. Let's get you some morning movers with Yahara Hackers. Hey, Yahara.
Hi, John. We start with Lucid getting a boost here in the pre-market, up 2.3% after getting an upgrade by Adam Jonas over at Morgan Stanley, changing his rating from underweight to equal weight. And let's remember, this is a stock that has been in a rut since the sudden departure of its former CEO. But Adam thinks that with new leadership, he sees scope for Lucid to play a role in the AI theme, which he says could re-rate the stock. Next up, we have another EV maker, but that is moving in the opposite direction, down nearly 2.5%. Tesla shares on this news that BYD's new EVs have raised the bar, offering ultra-fast charging. Just another sign of the Chinese company's growing dominance as it closes the gap on Tesla. I will also note that on top of this, Tesla did just get a price target cut from Tom Narayan over at RBC. And last up, we have Ralph Lauren shares. Those are up 2.8% after Goldman Sachs upgraded the stock to a buy and raised their price target. They say this is a company that has been executing well. The analysts also noted that Ralph Lauren has more limited exposure to near-term risks, including tariffs, as well as the health of the lower-income consumer. John?
Hey, Yahara, thank you. More from Yahara in the next hour. We'll get you some more movers a little bit later. Here's one right now, JP Morgan. This according to our reporting. Really interesting numbers here. According to people familiar with the matter, JP Morgan is on track to boost revenue from equities trading by more than 30% this quarter from a year earlier.
And that would put it on track for a record haul when it comes to equity trading revenues. Raises a question. Okay, we've seen a lot of bad news getting priced into the banking stocks just simply because there isn't the apparent wave of M&A that a lot of people were expecting, deals, the dynamism, et cetera. Can it be offset by the fact that volatility can be a good thing? There's good volatility and bad volatility, as we've learned, and maybe this is good volatility when it comes to stock and bond trading revenues for the banks.
The golden age of volatility. We'll talk about the M&A in just a second. On our radar this morning, German lawmakers voting on a spending bill unlocking hundreds of billions of euros for debt-financed defense and infrastructure spending. The Chancellor-in-waiting, Friedrich Merz, already securing the two-thirds majority he needs.
This is all set to go through. They have a buffer of 31 votes, basically something that I imagine Speaker Johnson would be incredibly jealous about. What I find so interesting about this is something Oliver Crook brought up earlier, the politics around it. This is an individual who is not even chancellor yet. Arguably, this is a government that does not have a mandate, yet they are pushing this through. And what kind of precedent does this set for the future?
The politics of it interests you. The economics of it really interests me. I want to understand how they're going to deploy this and what the ramifications are, not just for the growth aspects, but also inflationary aspects when it's hard to see whether they have the workers, the supplies, where are they going to get those supplies, the raw materials to really build up their military as well as their infrastructure. A lot of questions here, aside from just the knee-jerk boom.
We've gone from discussing parity on euro dollar to 110, just like that. 109.33 right now, and positive by 0.1% on that currency pair. Elsewhere, here's some news for you. President Donald Trump's top trade negotiator, Jamieson Greer, looking to inject order into tariff policy after weeks of confusion. Sources telling us here at Bloomberg that Greer is prepping to take control of the administration's April 2nd reciprocal tariff rollout.
I think this is important because we've seen in consumer sentiment surveys that the tariffs has been driving consumers with some anxiety they have going out and spending and what potentially the price levels could be in the future. Jamieson Greer, great reporting by Jenny Leonard and the team, is an individual who really flies under the radar. He's not out on the TV screens like you see the Commerce Secretary Howard Lutnick, and he's trying to bring a more principled, methodological approach to the tariffs, because right now it's been tariffs by truth. And it's been very confusing to see what actually the administration is going after. Is it fentanyl? Is it reciprocity? So April 2nd, Jamieson Greer getting his hands on it, I think potentially is market positive, but we still don't know what the tariffs are. It feels like they're building the plane as they're flying.
So April 2nd, you might get the announcement of some tariffs. You might also get the announcement of some investigations that could well lead to some tariffs further down the road. So if you're hoping for clarity after April 2nd, there could be a new runway of several months before you really get your hands around what the full trade picture looks like.
Which goes back to the question, what are people looking for with a Trump put? Are they looking for certainty, or are they looking for a walk back of some of these tariffs? Or is it some combination of both? And how are they going to get it when uncertainty is part of the whole program?
So for the business community, they came into 2025 looking to invest and hire. Now they've gone into wait and see. How long do they have to wait? How long before wait and see becomes fire and divest instead of hire and invest? Because at the moment, we're somewhere in between. Maybe it's several months, maybe it's a year. I don't know the answer to that question, but the patience of corporate America is being tested.
This is the reason why I thought Jenny Leonard and the team had a really interesting take, and that story was so important. Susie Wiles, the key advisor to President Trump, also said to be trying to get some of these concerns among corporate America in front of the president so he understands some of the uncertainty and what it's doing potentially down the line, not just to a freezing of plans, but exactly to what you're talking about.
Speaking of policy, we mentioned M&A. Check this out. Capital One saying it's, quote, well positioned to gain approval for a $35 billion deal to acquire Discover. Sources telling us here at Bloomberg the DOJ is concerned, saying a merger will harm competition.
So it sounds like something we heard continuously during the Biden administration. And this comes from this Capitol Forum. They posted on LinkedIn saying that the Justice Department staff had misgivings about the deal. So potentially this can hold back that approval. I'm reminded what Senator Dick Durbin had to say about Donald Trump's pick for antitrust division, Gail Slater. We discussed top priorities to protect consumers, including bringing competition to the debit and credit card markets. Potentially, this is going to be harder than people expected.
David Costin, Goldman Sachs. Due to the softer macroeconomic and market backdrop, we reduced our forecast for completed 25 US M&A volume growth to 7%, down from 25, a function of growth, CEO confidence, financial conditions, weighing on all of the above.
And maybe you can add to it maybe a less friendly antitrust environment than a lot of people thought going into this administration.
It's not what we expected. We did have this conversation about whether the J.D. Vance wing of the party would get its hands around the antitrust effort, and here we are.
Yes, but when it came to big tech, because remember, that started actually in Trump 1.0, and something that at tech forums, J.D. Vance has said things like, I actually think Lina Khan is an individual that's doing good work in the Biden administration. But now it seems like actually it's broader than just the tech space.
That's the latest on the merger push. Let's get the latest on the consumer. Disappointing February retail sales pointing to a pullback in consumer spending in the United States. Investors looking ahead to earnings from Five Below, Nike, and others this week. Anisha Sherman of Bernstein writing, a combination of bad weather and macro uncertainty around tariffs and immigration have put a lot of pressure on consumer sentiment. Anisha joins us now for more. Anisha, welcome to the program. This word transitory was used by Ed Bastian, the Delta Airlines CEO, and I think we all want to know how transitory this weakness might actually be. What's your view on that?
I think it depends a little bit on where we land on tariffs per your earlier conversation. So there is some weakness that hasn't even fully come through yet. We haven't seen the full effect of price raises that the tariff policy will result in. That is only just starting. So I think it could get worse before it gets better. The magnitude of how bad it could be depends on where we eventually land with tariffs. Do we end up putting tariffs on more countries beyond just China, more countries in Asia? Do we end up raising the tariffs on Canada and Mexico? Are there other retaliatory tariffs that we don't know about yet? All of those will result in price increases over the subsequent several months. And so this is kind of a lag effect. We're only starting to see the beginning of it. And if this is the extent of it, then maybe it will be transitory, but we're not entirely sure yet.
Anisha, we know the low-income consumer has been squeezed for quite a while. One pillar of U.S. consumption has been the high-end U.S. consumer, particularly for retail. Something we saw in the airlines is that long-haul and premium has held up quite well. Are you seeing any sign of weakness for the high-income consumer for the companies that you cover?
We started the year with a very bullish high-income consumer. In January, every higher-end retailer and brand were talking about a super strong holiday season, very low inventory, very strong January. We saw it in our own survey results of thousands of consumers. Above $100,000 earners were much more bullish about spending this year. That sentiment has also dampened. It hasn't dampened as much as it has for lower income, but yes, it has certainly taken a downward shift since the beginning of the year.
Anisha, how much is this uncertainty being driven by tariffs, and how much is being driven by pullbacks from government spending, from the fact that you do have people who are uncertain, not just about if they have a government job, but if they are a contractor? There just is a different feeling among businesses that seem to be on hold rather than the go-go days of peak fiscal stimulus.
Yeah, I think that's absolutely a part of it. That part also is relatively new, right? So many of these jobs have only just been eliminated in the last few weeks, so we haven't seen the full impact on spending yet. And the second piece of this is corporates. I mean, corporates are pulling back on investment and hiring at the moment because they don't know what to do. They don't know if this is a time to shore up cash and have a strong balance sheet in the wake of a possible recession, or to go ahead with that CapEx and go ahead with that hiring wave. So they're kind of in limbo mode at the moment, which also puts some pressure on jobs.
How big is the gap between remaining on hold, this is to John's question earlier, and actually engaging in cuts, starting to trim around the edges, reduce overhead costs with the elimination of jobs in a way that could be the next phase of uncertainty that leads to real action?
We're not there yet. We're not at the point where companies are saying we need to tighten the belt, we need to do some layoffs. We could be there. I think if we see strong signs that we're heading towards a recession and companies feel like they do need to tighten the belt, we could lead to that second step. We're not there yet. Right now, we're just in the wait and see mode, the inaction, the kind of, waiting to see where the chips fall. It could be a possibility, I think, if things get worse on the spending side.
Who's the big winner in this kind of environment?
Gosh, I don't know if there is one, but I think if I had to pick within the space of discretionary retail, I would pick brands that are more exposed to a higher income consumer, which is more resilient, less exposed to some of these spending shifts and pullbacks, and companies that tend to win in times of downturns. So my picks would be someone like a TJX, which does tend to win in terms of downturns. It's almost zero beta or sometimes negative beta. If you look at the GFC, it was a big winner. And I would pick higher income exposed names like someone like a Tapestry or an On, where the price point is high enough that if there are global tariffs, they can maybe pass on some of that, they can absorb some of that without really wrecking the business.
Anisha, appreciate your view on things. As always, thanks for catching up with us. Anisha Sherman there of Bernstein on retail. I see On sneakers everywhere now. Yeah. Everywhere, more than I see Nikes.
Well, they did a really good job at going to all of those running groups that you see in the morning when you go for early morning walks and making sure that they have their product. But you're right. I mean, they've really made inroads. Does that actually take a bite out of Nike earnings?
I can't run first thing in the morning.
Can you?
Just can't do that.
I actually, that's how I wake up.
Credit to them.
I see. I do it.
I know you do.
So what about credit to me?
It just gets cold. Credit to you. That's what you want. Credit to you, some credit as well. Credit to you.
I'm not running in the morning.
Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Alphabet is said to have restarted talks to buy cloud security company Wiz for $33 billion. The deal could be announced as early as today, and it would be Alphabet's biggest acquisition to date. Wiz would boost Google Cloud cybersecurity offerings, help it compete against Amazon and Microsoft. NVIDIA's Jensen Huang is set to speak at the chipmakers AI conference today at 1 p.m. Eastern. Huang is likely to comment on Blackwell, gross margins, China competition, and growth. Shareholders are hoping that Huang can inject some tech optimism and momentum back into the stock after an 11% decline so far this year. In sports, Argentina will be without its best player in its upcoming World Cup qualifiers. Leo Messi is dealing with a low-grade injury to his thigh and underwent an MRI on Monday. The 37-year-old's workload has become a key focus with both MLS and international play. The team did not give a timeline for his return. That's your Bloomberg Brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, right-sizing expectations.
Know what you own, know why you own it, and have right-sized expectations. And like us, you might be pleasantly surprised.
It's as simple as that, apparently. Joining us next, Greg Tuorto of Goldman Sachs Asset Management, live from New York. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice, my conversation, my poetry, you know.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Equities just a little bit softer here. We're down 0.25% on the S&P 500. Some big downgrades to growth over the last month or so from JP Morgan, Goldman, Morgan Stanley, RBC. Now looking for just 1.6% GDP growth stateside this year and looking for GDP growth to stall in the first quarter.
Yeah, the downgrades just keep coming. RBC yesterday, UBS Global Wealth Management, Salita Marcelli, saying that we see a 20% chance of a stagflationary market outcome caused in large part by the highly aggressive U.S. tariff policies. The downgrades just keep on piling down. Slower growth, potentially higher inflation.
A lot to consider going into the two-day meeting at the Federal Reserve. That meeting concludes tomorrow afternoon. And as Savannah's this morning, right-sizing expectations.
The policy uncertainty takes us to say, well, this is just about what you would expect. That's quite natural. We think the way to weather it is with prudent diversification. It's not something that is indigestible. Know what you own, know why you own it, and have right-sized expectations. And like us, you might be pleasantly surprised.
So here's the latest this morning. U.S. small caps looking to rebound from 2 consecutive months of declines as policy uncertainty weighs on markets. Greg Tuorto of Goldman Sachs writing, small caps are poised to outperform. They seem to be people's way to worry about a recession, and we think that's misplaced. Greg joins us now for more. Greg, good morning. Good to see you.
Good morning.
Let's start there. That's an interesting line. Why do you think that's misplaced?
Yeah, I think small caps since COVID have been people's favorite play to worry about the economy, and I think it's because you've seen some different structures happen in fixed income, and I think in the domestic economy, even with some of these downgrades to growth that you referenced, there's still some pretty stable opportunities out there, and it may not be as good as we thought it was going to be going in, but I think it's going to be better, than kind of some of the downside predictions.
Certainly been anything but stable. So let's frame the last several months. Coming out of the election, boom. Let's go. November, great month. Then the weakness started to kick in. What started to go wrong?
Yeah, I think that there was a digestion period after such a strong month in November. I think that there was some worry about how some of these policies were going to kind of impact kind of the engines of growth that we had seen kind of in the economy, consumer being one of those areas that had done quite well in 2024. And I think that people were worried about how to place bets, and were we back to the Mag 7, or was it a broadening out type of environment?
At the same time, one of the reasons why people were excited about small caps for an immediate hot second right after Donald Trump was elected president was a combination of deregulation, a combination of the ongoing disinflation, and just generally U.S. exceptionalism continuing. All three of those pillars have been challenged in the past couple of months. Why is that not enough to challenge your assumption that small caps can really outperform?
Yeah, I do think that there is a kind of an underlying earnings story here that is kind of is the fundamental piece that doesn't get kind of brought into those top down type things. So the bottom up story is better than the top down. I think that that's one area. I think the other piece of it is that there's been a kind of a dearth of M&A for a few months, and I think we saw a nice big splash of that in January. A little bit more today, what's happening with Alphabet on the cybersecurity front. And I do think that private equity, along with some of these strategics, could come in, and that could be another valuation dynamic which can meet that fundamental earnings picture, which makes things get better.
That pillar is also getting challenged. So let's talk about it. We were just talking about Capital One and Discover, and this idea that it could be stymied by the Federal Trade Commission, even though a lot of people thought this would be the administration that embraced a lot of the financial deals that people said would be in the pipeline. How do you take that? Let's say this is true. It is a report that is unconfirmed. How do you take that with respect to this administration's willingness to allow a lot of these deals to go through?
I think there are some areas within M&A that are third rail, and that's one of them, credit cards. But I do think if you kind of go into the other side of financials, you see a lot of small banks that are really looking to consolidate. We do think small banks and mid-sized banks will have a lot of consolidation. I do think that many of these companies are in better shape than they were, back 2 years ago, right? March of 2023, the Silicon Valley days, and I think you have a lot of these companies that are looking for either exits for management teams or for kind of growth opportunities in areas. I do think tech as an area, you've seen a lot more M&A in tech than in past years. You didn't see a lot last year. You saw a little bit in the beginning of the year. You're starting to see some now. I do think that helps. Healthcare is an area, I think, that you had 2 years where nobody did anything in healthcare other than a couple of biotech deals. MedTech, you saw a sizable MedTech deal earlier in the year. I do think that that's an area impacted by GLP-1s. I do think that that's an area where you can start to see some big opportunities being created as some companies look to kind of the inorganic pace of growth, to kind of help out some of the tailwinds that they need.
Credit cards maybe are the third rail, but when it comes to tech, the synergies are pretty much the same when it comes to the Biden administration, Trump 1.0 and 2.0 on how they view tech getting too big and antitrust and their concerns. So what kind of tech deals do you think could actually get through?
Well, that's the good part about being in small caps. We're below that radar screen, and we can stay away from those things. I think cybersecurity, like we saw, is an area that I think you'll see both private equity and strategics go after. I also think that some of these AI application companies that where you're seeing AI being used as a revenue source, not just something that's out there that's people are talking about. That's an area. I think semiconductors, which you're starting to see some of these companies start to think about what does my picture of my growth rate look like, in a non-CHIPS Act environment or in a more nationalistic environment. Some companies are stronger, some companies could be weaker. I think that's an area, especially in domestic production, which you can stay away from some of those FTC type issues. And I think that those are kind of away from some of those really big picture problems that people worry about.
Big picture problem right now is that U.S. equities seem to be out of vogue and might be for a while. How challenging is that for you and the team?
It's not fun, but I can tell you that, I think that there's a, kind of a broadening out that's happened over the last 2 days that feels a little bit more normal, and it's 2 days, and you take each day at a time. That feels like you're starting to see some things that have worked. Energy has been positive for a couple of days. I mean, energy has been weak for a very, very long period of time. And if people are going to come back into those areas, you may think that there's a, there's been an opportunity that's been created that people may start to think about, kind of coming back into U.S. equities. We were so heavily overweight U.S. equities back in January. I think that was something that happened. You look at some of the people who look at flows. Things are really, really over their skids. The VIX was really low. We're kind of inverted now, so maybe it's an opportunity.
So you put it as more of a momentum trade and more of a valuation issue rather than some sort of structural shift with flows out of the United States and towards Europe, correct?
I think so, and I think that if you go back to December, January, nobody would have bet on, kind of Europe leading the kind of the scorecards in terms of what had happened out there. You've changed things so quickly. I do think things have to come back into balance. Things aren't as bad as we've seen over the last 2 months. Maybe they weren't as good as they were back in November and December, but it doesn't, this shock, kind of loss we've seen in some of the U.S. equities, it seems a bit overdone.
The Tao was definitely at the World Economic Forum in Davos, Switzerland. I have never seen people so enthusiastic, the U.S. economy, and so pessimistic European markets.
Yeah, and peak pessimism. Who was that who said they always want to invest in peak pessimism of central bankers because that means that they probably have the markets back? Look, what I'm looking at right now is a lot of optimism about Europe and a lot of quickly moving pessimism about the United States. And what Greg just said there, I think, is the sort of contrarian take at this point, which
narrative
is
follows price, right? Yeah. So when you start to think about that, it builds upon itself.
It's flipped so quickly in just a few months.
Well, it's a good point that you bring up Davos, because isn't the thinking, whatever is consensus at Davos, do the exact opposite?
Yes, and if you did that, you'd made a lot of money over the last month or so. Greg, it's good to see you.
Thanks for having me.
Thanks for dropping by. I appreciate it. Greg Tuoto there of Goldman Sachs Asset Management with some things to think about regarding small caps. In the next hour of Bloomberg Surveillance, we'll catch up with Brent Schutte of Northwestern Mutual, Pierre Farragut of New Street Research talking NVIDIA and a whole lot more. Stephanie Roth of Wolf Research, James Camp of Eagle Asset Management on day one of a two-day meeting for the Federal Reserve. Equity futures on the S&P just a little bit softer, down 0.2%. In the bond market, yields just a little bit higher, up 2 basis points. Your 10-year 4.32. The third hour of Bloomberg Surveillance up next.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency. The other penny was lower G&A, blah, blah. Forget it. big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, you know, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere, and I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think that all these little girls and boys, I don't want to discriminate, who are now in school-going age, imagine once education, sports, we empower them. What a difference they would make not only to India, but to the planet and the world. And the world needs it now than ever before.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We've wiped away some of the post-election euphoria. People are tamping that down.
Investors globally have got to take more balance. That probably means lightening up on U.S. exposure and broadening out to the rest of the world.
The administration has greater tolerance for a move lower in the market and even a full slowdown in the economy.
It's going to seem loud. It's going to be a lot in the headline news. But for the long run, we will get through this.
There's this really negative narrative around tariffs. I promise you it'll change as we get into the summer months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Things are a little bit quieter, just a touch. We'll see if it sticks, we'll see if it holds. Equity futures going into the opening bell 90 minutes away, negative by 0.2%. Not a big move. On the Nasdaq 100 down by 0.4 over the previous 2 days. A sizable move. A gain of almost 3% on the S&P 500, the best two-day pop on the S&P of the year so far. Coming up later, down in Washington, D.C., the FOMC getting together for a two-day meeting. That meeting concludes tomorrow. It's a three-part act, a decision. We don't expect any change. A news conference, Chairman Powell in the spotlight. And I will say this, the forecast could be the main event. They could be absolutely fascinating.
They could potentially price in either fewer rate cuts for the remainder of this year or more rate cuts if they are going to emphasize the slower growth profile. That is where we will get the messaging, essentially, for how they continue to view the trade policy that they now cannot shunt completely out of the conversation. We have some elements of this trade plan, and they have to address not only what's taking place in Washington, D.C., but at companies around the country.
Professional forecasters have responded to this. On Wall Street, some of the biggest banks have downgraded U.S. growth. We've seen some real companies come out and say, in the middle of February, we started to see consumer spending stall. I'm thinking of Delta Airlines. We've seen several big banks over the last week or so downgrade their outlook for U.S. equities, including Goldman Sachs, including the likes of Lori Calvasina at RBC.
Talking about bringing down her estimate to 6,200, about a 6% drop from the original 6,600 on these potential stagflationary types of wins. The other big question here is how much of this is coming at the expense of the U.S. for money to go elsewhere, like to Europe. I mean, ultimately, how much is this a flow story where maybe exceptionalism is moving? Because everybody's exceptional. Everyone can be exceptional as long as they put the fiscal spending behind it.
So by definition, no one is? Is that the way you're thinking about this?
You get a prize.
You want to get super philosophical about
this? Yeah, exactly.
Okay. Sentiment shift. Let's talk about that. A monster one. And when we're talking about that, we're thinking about money moving from the United States to Europe. The push for peace in Ukraine is a piece of that bigger puzzle. There will be a bigger push later on this morning.
Right, as soon as 9 a.m., potentially that call is set to begin. And what we could see here is closer to peace in Ukraine. Yesterday, Caroline Levitt, the president's press secretary, said they're on the 10th yard line. But there's caveats to this. Our reporting already shows that Putin is coming in with incredibly high demands that Ukraine definitely might not accept, but even this administration might not be willing to accept. You have to think, is this just maximalist for Putin, or is he not going to budge?
The euro just about unchanged going into that conversation later on this morning. Equity futures this morning softer by a third of 1%. Coming up this hour, we'll catch up with Brent Schutte of Northwestern Mutual, with stocks eyeing a 3-day rebound. Pierre Ferragut of New Street Research on NVIDIA's biggest event of the year, and Stephanie Roth of Wolfe Research looking ahead to tomorrow's Fed decision. We begin this hour with stocks lower after notching 2 days of gains. Brent Schutte of Northwestern Mutual writing, we continue to see volatile days ahead. But here's the good news. Other parts of the market offer opportunities for patient, long-term investors. Brent joins us now for more. Brent, welcome to the program, sir. It is not even a month since we saw all-time highs on the S&P 500. I believe it was Feb 19th. That was something like 7 or 8 percentage points ago. Brent, a lot's changed, and it's happened fantastically fast. What's behind it?
Just the uncertainty that's out there, and as you've mentioned before, the different flows to different parts of the market where investors were way underinvested. And so I've heard a lot of the conversation this morning about how flows have already moved towards Europe.